startup, professionally I should say. We have had many events with our own ICBNs. We have, as we said, Diggaj of ICBI, Abhishek is here, Shrish is here, Alkesh is here. And thanks to Alkesh, who has organized a startup talk with one of the best of the country's friends. Can we hear it for our guest speakers and for the pitch-in companies who have come in for ICBI? I'll just briefly introduce about ICBI to our guests. This is a business organization which we have formed 4 years back. We have like-minded entrepreneurs, around 250 members in the city, where our main motto is to learn through each other, learn with the experiences what we have seen in the past, and to grow together. The motto of ICBI is let's connect with trust to grow. As I said, our biggest USP is trust. The most important part about ICBI is that we only get members if they have been referred by a member and if they have not been blackballed by even a single member. So that has been our USP. That is how we have been growing together. It is more like a family, and we have been doing many events in the past. Idea, as I said, is to connect and have a good networking, views about each other, having business proposals, business ideas. There are many chambers, many organizations where we meet, where we interact, but at times people are a little skeptical to talk about business, which I feel is also one of the most important part of our lives, along with friends. So that was the main idea why we formed this organization, and thanks to each one of you that ICBI today is doing wonderfully good. Thank you so much. And once again, I would thank our guests for being here. We have a small video. Is the video ready now? Where we'll just play a 4-minute video about the past events about ICBI so that we can have a brief idea. 1 second. So we'll play the video later, friends. I'll request Shrish to take over the session, and let's get started.
Thanks, Majbhai. Thank you so much, friends. First, thanks to ICBI for creating this platform and giving this opportunity whereby these startups can come and present themselves. So thank you, ICBI, for this. I'm really, really excited for this event. You know why, friends? Any guesses? This is the first time I can see so many sharks together, all flocking together, right? Some are aspirational sharks, some are actually sharks. And let me tell you, we are expecting a few whales as well today. Just wait for the panel discussion to happen, and you will find those whales here up there on the stage. सिर्फ अभिषेक नहीं, आज अभिषेक से भी बड़े-बड़े तुर्रम खार लोग आए हैं यहाँ पर. So we are going to hear out from people who have been there in Google, or in Amazon Web Services, who have been investing since years. We have Pallav with us. So before we go to the panel discussion, where we will be able to learn a lot about this new asset class, right? I'm sure all of us are very inquisitive to know, is this asset class really worth investing in? Should I really move out of real estate and put my money into this? Sachmuch, is it just risk or thoda sa ishq bhi hai, right? So we are going to find out all these things today. But since this session is going to be very practical session, what we have done is that it's not going to be just a gyan session, right? We are going to touch a lot of practical aspects. So what we are going to do is that first we will have 2 startups who will come up over here, and they will tell you about their story. They have raised funds. They are doing something unique. They are growing in their own ways. They have created a niche for themselves. So let us hear from them. What is their experience of raising fund? How have they really grown their organization? What are the challenges that they have faced? Was it a right decision for them to raise funds? Did the investors really put a lot of pressure on them? Or did the investors really add value to the organizations? So we'll learn from them. Second, we'll have this panel discussion. And last but not the least, I mentioned about shark, right? So we will all get an actual feeling of a shark. You know why? These 2 startups called Preggers and Kaching are going to pitch over here to all of us. And we will actually have the opportunity to come forward and commit in them. These 2 rounds are still open. So if you really want to come and participate in their growth journey, we'll have the option to do that. So without further ado, let me get things started. So let me invite Anish on the stage. Anish, are you here? Hi. Can we have a round of applause for Anish, please? So Anish is the founder of Tablet, right? So he has raised funds recently. He's again raising funds. He's growing exponentially, right? But what is he actually doing? Let us hear straight from the horse's mouth, right? Anish. Yes, and Anish comes from Kolkata, and it was not planned, but even the second founder who comes here on the stage, Rajit from Data Sutram, even he's from Kolkata, right? So after this, I'm sure we'll not have any complaints about Kolkata. Kolkata में कुछ होता नहीं है, right? बहुत कुछ होता है. Over to you, Anish.
Yeah. Hello. The presentation. यहाँ से करना है.
कहाँ पे पेस्ट किया था?
Meanwhile, hello everyone. It's a privilege, first of all, to be standing here and presenting to the ICBI members. And I thank the organizers that they thought us fit to share a few things about our startup journey. I am, just before we begin, I am Anish. I am the co-founder and CEO of Tablet Pharmacy. And as Sirish Bhaiya just mentioned, yes, I am from Kolkata. Originally belonging from Asansol, a city 200 kilometers from here. Did my computer science engineering from IEM. The bug of doing business hit me early, and here I am a few years later, sharing some of the parts with all of you. Well, I'm sure all of you have been buying medicines for you yourselves or family for many years now. It is something which is an unavoidable evil in our lives. We have to buy medicines. Well, Tablet Pharmacy aims to reimagine how pharmacy. This is fine. This is the pointer. Yes, this one? Okay, thank you. So, you know, where was I? Tablet Pharmacy is a different kind of a pharmacy. It's not just a pharmacy. We call it the lifeline for Bharat. Bharat is tier 2 and beyond, where all of us know, and I will share some of the pointers, how Tablet really has created value for people like Shubhoda. Who's Shubhoda? He's a exact ideal example of who our customer is. He's 57-year-old. He lives in a very sleepy town called Kumir Moda. Kumir Moda is near Dankuni. It's a small tier 5 population town. And Shubhoda somehow has some chronic conditions like diabetes, blood pressure, arthritis, which happens with age, right? Shubhoda goes to Das Medical Store to buy his medicines. All of us are aware about the Das Babu in our locality who is running a mom and shop pharmacy. Now, when Shubhoda goes to Das Babu pharmacy, there are a few challenges. First of all, every time Shubhoda goes, for every 2 times Shubhoda goes, only once does he receive his insulin. Remaining times the insulin is not in the stock of the Das Medical Store. Shubhoda has arthritis, if you remember from the previous slide. Shubhoda had a few people whom he was dependent on, his sons, but now the sons are doing a job in Bangalore. So it's very inconvenient for him to travel to the Das medical store, buy medicine, stand in a line, come back home. It's still not very convenient when you go to tier 2 and beyond. And when Shubhoda buys the medicines and finally he hopes that a middle class man like Shubhoda would be able to save some money on his medicines, he talks to Das Babu discount. How does Das Babu look at Shubhoda back then? He looks like this. And when he insists on Das Babu, what is the kind of sound Das Babu makes? This is the kind of sound Das Babu makes. Absolutely not. Well, Tablet understood these problems. We did our market research, as does any startup in their early days, then a bit more churning. And we built a community-led distribution model. We believed that pharmacy or e-commerce could be done in a way which meets the best of both worlds, the physical retail world and the online, the newer, the one that we hear about, the online world. So we developed a community-led distribution model. This is how a community-led distribution model looks like. Here on the right side is Animesh. Animesh is 35 years old. He was having trouble finding a job. One good day he came to know about Tablet. He connected with the team. He said, okay, we will become your community partner in Kumir Moda. And he had a small 75 square feet space in Kumir Moda, which he labeled as Tablet, and he started building business for Tablet. Now, how does this work? Shubhoda connects with Animesh, he visits the shop or he calls and he places an order. Now Shubhoda is not very tech savvy, he isn't able to place orders. Remember, he's 57 years old, he is not very educated. So Animesh, who is very tech savvy, helps Shubhoda place an order at the Tablet portal. The order reaches Tablet. Tablet has a 16,000 square feet warehouse fulfillment center in Kolkata, where more than 15,000 medicines are stocked. And Tablet then takes care of mid-mile logistics. Now, what's important to note here is Tablet is not dependent on third-party logistics like many other organizations, many other e-commerce companies. Tablet ensures that through its multi-tier mid-mile logistics, in-house capability, even if today a customer places an order, maximum by tomorrow afternoon, the order reaches the community partner once again by the next day. And therefore, the last mile community partner that we have is able to deliver the same medicines to the customer. So the customer places an order today, the customer receives an order tomorrow. And this is really very important for smaller towns who are in need, and generally old age people who typically forget to plan their medicines in advance. That is where this turnaround time really matters. However, not only does the community-led distribution model add value to the customers there, it's an entire underlying layer of technology. The entire service is amplified by the power of technology like a vernacular app. Many customers, they feel like, no, we will directly place an order. We have a Bengali, we have a Nudia, we have a Hindi, we have an English app. Many customers feel we can call and place an order. We have a 24/7, 365-day call center. A significant amount of volume of our business is transitioning now from the community partners to the app and telephony. A very dedicated CRM system for the community partners so that they can have direct, wonderful relationships with customers, and no customer has to go through a pain. There is appropriate reminders for the same. An inventory management system which regularly feeds in data, experience and sales data for every month, which helps Tablet to hold inventory which is lesser than 15 days, which is 1/3 of the average inventory time of any other pharmacy business in the country. And I'll let you know later, with the shortest inventory management, we are able to fulfill the highest in the entire country. There's a mid-mile logistics system, there is a last-mile logistics system, the entire technology is integrated with this community-led distribution. The last-mile delivery app helps the last-mile delivery boy to connect with the last-mile customer. Even if the customer wants to make a partial return, it can be real-time calculated, and a real-time monitoring can happen from the central system to the last-mile app, which ensures a seamless service for the customer. What we have essentially done here is, by taking out the third party the third party logistics providers, we have ensured that the flow of information does not have any lag, the flow of goods does not have any lag, and in fact the flow of cash, which is very important for startups like us, does not have any lag. So this is the value innovation that we have been able to bring to the pharmacy business for the tier 2 and beyond market, which really helps us have an omni-channel and vernacular experience for senior aged people, which has helped us deliver a next day service, which has helped us deliver, as I told you, 95% fully fulfilled orders. Now, just for context, just for benchmarking, if you go to a regular pharmacy in the country, this fulfillment rate is closer to a 60%. With most of the larger e-pharmacies we hear about, this fulfillment is closer to 70 to 75%. Tablet today is able to operate at 1/3 inventory, 95% fully fulfilled orders, which actually leads to a 94% retention rate for tablet. Now that was business. The value that we really add for our customers, and that's the core purpose of our journey, the innovation that we do. What is the end goal? The end goal is close to a 30 crore in savings, which matters to the lower income group in the hinterland part of our country. And I've put it out here. The testimony that you see here is actually from one of our ICBI members, Amit Da. We have been able to generate employment to the north of 1,000 in semi-urban and rural. I hope Didi awards us for that somehow. And in Bihar, and in Jharkhand, and in Odisha, so the BJDs of the world as well. We have ensured that we have strong women participation. 25% of our community partners are women-led. Interestingly, as I told you, we have an omni-channel experience where a customer can even call us and place an order or, on an app as well as community partner. 10% of our 1.5 lakh users are actually the above the age of 70 who happen to actually pick up their phone, place an order with our central customer care. We have ensured that they are now not dependent, at least for their pharmacy services, on their caregivers, on their family caregivers. We also help in discovering various health conditions that the people have in those markets. These 100 health camps have been conducted in the last 3 months only. Now this actually gives us a complete fulfilling picture. But to take it further, because I know the businessmen community are sitting here, they would like to know that yaar har startup to paisa jalate rehta hai. What's bloody new about you guys? What's new about us is this. When you compare us with many other e-pharma companies or pharma companies of the country, we actually happen to have a far better capital efficiency ratio in terms of revenue to capital ratio for the first 3 years. And this is the reason that we have been able to create a niche for ourselves in the tier 2 and beyond markets. We have been able to get backers. We are continuing to get backers. We have been able to serve customers without worrying much about our funds. And the core reason for that is a very, very low cost of acquisition, a very, very high lifetime value. Means to say, for every 1 rupee that we spend on customer acquisition, that customer actually comes back and spends 9.2 rupees, and which we are able to save as profits for us. This enables our business to have a long-term future and become a much more sustainable business and not only a fad for a couple of years. Well, the market is large. The Indian pharmacy market is $43 billion. Just for context, when we start up, we need to ensure that the market is so large that the initial investors who are coming in are able to take their stakeholdership to a large extent, that this is what attracts investors. This is what we as founders, when we are in our late 20s or early 30s, this is what excites us, that one company that we will be invested in will take us for a long, long time. For investors, it's mostly return on capital, but for founders like us, it's mostly return on our time. So we need to ensure that we are in a large market, which has a large, out of the 43 billion, close to 30 billion is what the Bharat pharmacy market is. and out of that, 14 billion is what the crone. So this is my market. This is the market I am targeting. It's a $14 billion market, and this we are talking about India, where the online penetration of the larger pharmacies you hear about only have a penetration lesser than 2%. But companies like us can create disruption with our phygital models. Well, happy to share that because of the model, because of the fitment that we have with the customer, because of the very high retentions, because the customers have loved us, the customer says, okay, we will repeat order with you. We have been able to grow 7 times in only the last 3 years. Although we started in September 18, we initially grew very fast to be close to 9 crores in annualized revenue by April 2019. And you can see on this graph, for a startup, the journey is never as smooth. It goes up and down. The significant sharp drop that you see is what God has gifted all of us with, and that is COVID. But at the same time, it gives opportunities for young companies and young teams like us to prove our mettle, to go through the times and to jump back. And by God's grace and by the backing of many wonderful people, we have been able to jump back, and within 3 years from close to 10 crores, we have been able to post a 70 crores annualized run rate within the eastern part of the country. Well, this is just scratching the surface. As I told you, the market is large. We have been catering to 1.5 lakh customers. In total, having sold close to 142 crores of business till date. But the core benefit that we have standing today right here is the distribution that we have already built. This is what would lead tablet and healthcare in the East to much greater heights as we go ahead, because of the fulfillment center network that we have already built, because of the 450 plus community partners we have already built, which have now been nurtured, trained to talk to customers, resolve their queries, do assistance, and various other parameters. And we have been covering 1100 pin codes on the eastern part of the country. Continuing with the last slide. So the real asset that we have built, so there are 2 parts to our business. I think some part I've shared in terms of a P&L statement, in terms of the revenue growth. But the real balance sheet that we have is this. The data that we have collected for customers, about customers, what we know about them today. The distribution that we have built. The scale that we are about to reach. And the brand and the trust and the love that is shared between us and our customers. Actually, the larger plan leads us to bringing generic medicines into play, which is very important in a low income market, to bring a lot of private labels, smaller labels, which really matters to the customers in non-medicines category. Ultimately, our larger vision being that in 4 years' time, we are targeting from a 70 crore revenue today to be a 1000 crore revenue company in almost 4 years' time, and become the pharmacy for Bharat, and take this entire model from the east to pan-India, which is a need of the hour for healthcare. Well, my presentation cannot end without sharing with you about my backers. It is because of the believers in us that we have been able to do the business. And as Sirish Bhaiya was initially mentioning, कि you expect us to share कि investors कैसे है, कैसे पैसा उठाया, क्या किया, नहीं किया. So just I'll take a minute on that as well. Jito Angel Network Incubation Innovation Foundation was our first backer, and since then a host of other backers including Tech Innovation, Cedars is here in the room, Angel Bay, Union Ventures, Let's Venture, they've all backed us up, believing in the story that being capital efficient, which was important for us. What we typically see, and I hear a lot of people say कि boss जितना burn करोगे उतना high valuation मिलेगा. Well, that's not exactly true. You can ask founders like us. जितना burn करेंगे investors तुमको उतना दूर रखेंगे. There's a nuanced story to everything. Even if companies burn, there needs to be a story where we are showing very strong and a quick turnaround time in terms of when we reach profitability. It was because that is something that we could convey to our investors. They have been able to back us up because we have been able to convey that it's not only business, we really believe in what we are creating for the customer. In early stages, definitely the investor as far as I understand, does not actively interrupt or interrogate you. They do interrupt and interrogate while you're pitching to them, but once they believe in you, I think they very, very solidly believe in you, and that is what has happened with all my investors. And Shirish bhai, to isliye just to clarify, none of the investors ne humko kisi ne tang nahi kiya hai. In fact, early stage investments, the angel investors mostly who come on table, I've seen them to be very, very patient, that boss, hamara capital tumhare piche hai. And as Abhishek bhaiya famously says ki तुम मेरा अपसाइड का ख्याल रखो, अगर डाउनसाइड कुछ हुआ तो उसका कोई टेंशन लेने का दरकार नहीं है. So I thank him for that and all my investors for that. So I'll probably leave my journey here. Thank you so much, everyone.
Thanks, Anish. Thanks, Anish.
Thank you so much.
Very enticing journey. So I'm sure we have got to know a lot of things from Anish. So what was really interesting is that we can really say that he's doing exactly something similar to what 1MG and Pharmacies of the world are doing, right? So what he has actually done is that simply tweaked the distribution model. He has used technology in the right way. He has created a different market for himself and great execution. That is what makes Tablet what Tablet is today. So it's not just a startup, it's a startup which is actually doing real business on the ground, right? So on this point, I'd like to invite Rajit here on the stage. Rajit from Data Sutram. This team is also from Kolkata, and these guys are doing some magic with data, right? What is that magic? That is what we like to understand. These guys pull out data from space, from satellites, from mobile phones, and they mix up this data, create some insights, so that entrepreneurs like us, industrialists who are doing a lot of business, are able to take some logical decisions around it. So over to you, Rajit.
Thank you. Hi, everyone. Good afternoon. Hello, yeah. Yes. चेंज कर लो थोड़ा. इधर से हो जाएगा ना. ठीक है, हम इधर से कर देंगे. छोड़ दीजिए. Good afternoon, everyone. Thank you for coming on a Saturday afternoon here. So a bit about myself. I worked in the analytics background for some time, graduated from Jadavpur University, did my electronics engineering. Me, Ankit, Vaishik, three of us were batchmates in college. Worked in startups, had the opportunity to be part of startups' journeys from start to IPO. And eventually, during that time, kind of the startup bug got to us. One problem as an analytics engineer that I used to see repetitive across was fundamentally data. And the problem was, as a data scientist, when I was going out there and trying to build a model, the business would always question that, hey, you know, if I'm going to put in money into making this data science model, then what is the ROI that I see in the P&L? As an analytics engineer, I used to be fascinated by the cool things that I could possibly do with data, but I would never understand why my boss would not, you know, actually give me the money to implement that project. And that really got to me in the sense that I understood that most of the enterprises today, even though we are talking big on AI and ML, do not actually spend or see the result in the ROI of it. And today I'm going to take you through that journey. So in fact, it was a great moment when in 2022, after building 3 years of Data Sutram, Forbes Asia recognized us as 30 under 30 in the enterprise technology category, especially from Calcutta. That became a great feat for us. Moving on, we have raised around $2.5 million till now from some of the investors. I'll come to this slide later. I'll move on to talk about, again, why I started Data Sutram. And the reason was that the truth was that in India today, all that we talk about AI and ML is garbage in and garbage out. The reason being that we really do not have very good quality data to back these models up. And the reason? The reason is very simple. India has just gone through an IT revolution, and most of the data that has been collected is in a situation of unstructured form, which is not directly consumable by business. So what we have done is we have built a data platform that connects to over 250 plus sources. And that connects to over 157 million smartphones, 20 million POS devices, 16 plus satellites, where we are able to understand how people and places are behaving in a given location. We clean and structure the data collected through these sources in an automated manner, and we process to create intelligence on two factors, people and places. And this data then further is used into building applications. So what is this data I'm talking about? So if I look at people, against every mobile device ID, we are able to understand the geo-behavior of this user. We are able to understand that against this device ID, if they're sitting in Altair, or is walking in Park Street, or is playing in Jadavpur. We know that what brands they're walking into, we know what shops they're visiting, but at the same time, no matter how scary this sounds, we do not have any information on name and phone number, which says that this data is GDPR protected. The second type comes in terms of places. For every shop, today we have data on over 6 crore retailers in this country, where we know the footfall coming into those shops, we know how much, if there's an affluence user coming in, or what's the average ticket size that's getting sold in this shop. Now with these intelligence on people and places, we are building across, and I'll come to this part, we are building across sectors. We are working in EV, we are working in retail, we are working in banking, finance, FMCG. This kind of horizontal data platform has applications all across. Now, for example, what I was talking about, right? This is a piece of stretch of land in Lake Gardens. Now, against this, against every place, I know the medical store, the address, the type, the contact information, the footfall, how much of high-income people are coming in, and so on. If I go on to people layer, against every device, I know, okay, this is a male 31-year-old Reliance Jio network, Xiaomi phone, walks into financial institutions, beauty enthusiasts. I'm able to profile this user, but nowhere there's a phone number, there's a device ID against which we are storing this information. Now let me talk about where we are really working. Today, Data Sutram is based in Mumbai. We're working across financial institutions, and where major impact has happened onto the finance segment. We are working with over 50 plus enterprises, including Paytm, Amazon Pay, some of the largest fintechs and banks and NBFCs in the country. The first area where we are working is in terms of providing intelligence to enterprises. So today, every time there's a Paytm or an Amazon Pay sales head, they want to understand that which are the areas that I am tapping onto. What we do is we look at SME density, we look at how much card usage is happening, we look at the smartphone penetration in that area, and we are able to provide them intelligence that which are the cities they want to target, which are the PIN codes they have to tap into, how much business should they expect out there. A bank branch manager, and I'm quoting one of the largest banks in the country, their head of banking used to say that, we used to say that, okay, there's a branch at Nariman Point, this branch would surely do good. But today, they're looking at actual data points in terms of how much of spend is happening, how much people are using cards, how many accounts are opening, are actually rationalizing that behavior. So that branch manager who used to not understand why the bank branch at Nariman Point is not working out, today has the right data to understand that, yes, these are the reasons why this branch should do itna sales, and are not going by hypothesis or intuition or guts, as we call. Today, once you understand that this is a micro market you want to tap, we are providing information in which are the shops, which are the MSMEs who need loans, who need certain softwares, who need certain products. And that is enabling the adoption of these financial instruments. So if I look at it in a fundamental way, fintechs, the last 1 year, the 1.5 year growth by M-Swipe or Paytm or Pine Labs or any large QR or POS companies being fueled with our intelligence. With the banks, we have just started. Some of the largest banks in the country, Indocent, RBL, HDFC, have started using our product. NBFC, India Infoline, was one of our largest backers and has been using us for long to increase their lending business. Coming into fraud, today we have all seen Jamtara. We understand what kind of fraud is happening, especially in digital lending, digital payments, etc. Now, when it comes to fraud, the other side is, due to this fear of fraud and risk, a large part of our country is also not getting included from a financial perspective. Let me take a small example. We have all seen tea stalls like this. Now, these tea stalls or these shops out there, which are Kirana stores, as very popularly known, today banks have a mandate to the government is pushing for SMEs and Kirana stores to get more and more loans. But NBFCs are struggling because the traditional credit bureau cannot give a CIBIL score for a Kirana store. They cannot say that how much of business is happening on cash in their account statements. So bank statement is failing, credit bureau score is failing. But what is working? Now, if I can provide the lender that this tea stall is just in opposite Millennium Park in Sector 5, where there are 10 big offices, and every now and then, every hour, there is 40 footfall happening near that tea stall. And there are so many purchases happening on QR. Automatically, the lender has a comfort to be able to understand the intent, the stability, the capacity of this user, and can automatically disburse a loan out there. And that's where we are driving the financial inclusion. Today, large part of new-to-credit customers, loan books, UPI POS is where Data Sutram is making a large impact. Now I'll go into another use case, retail. I'll take an example of Wellness Forever. Wellness Forever did their IPO, and one of the largest retail chains in medical. Tablet just pitched, so this is a traditional retail store out there. Now, Wellness was a company who was our first customer. 2.5 years back, I was in Mumbai pitching to Wellness when Data Sutram was a concept. And in the last 2 years today, Wellness Forever has opened more than 113 stores in the last 2 years using our intelligence. And I wanted to take you through it because just coincidentally, 1 week back, I filed for my 3rd year renewal and I submitted a report to them on their impact. Now, what have we done? They analyzed through our platform 150 pin codes. Now, each pin code, they could know that which are the clusters where they should open their store in. And for each cluster, so this is a pin code in Bandra, and you can understand that, okay, there are around 14 clusters they should go in and open their store in. Now, each of these marketplaces, the green marketplaces, are where they want to open a store. So automatically, just sitting in my computer, the director of Wellness Forever knows that which are the areas I want to go in and where I want to tap in. And this is not theoretical. Today, in the last 2 years, they've actually opened out of the 113 stores, 86 stores have opened in areas of high potential, 27 in medium, and 0 in low potential stores. And what has happened is previously their average monthly sales has actually become 1.7 times of what used to be. And the shutdowns have just reduced because we're actually able to use data to be able to provide the right decision. If I look at CPG, one of the largest FMCG companies in the country, ITC, and today we are enabling a lot of their products in terms of field force management, in terms of telling that which are the products to push where. So a lot of applications of this data comes out. And if I look at it from a market perspective, right, we are just sitting at the top of a huge gold mine because India is just the start. Southeast Asia is following a very similar market in terms of fintech and the financial ecosystem. Middle East, again, suffers from a huge unstructured data nature. And together, looking at these 3 markets, we are building a very horizontal data platform where we have global data partners. Truth is, I'm quoting one of the largest card companies in the world. They have very accurate information that they're putting out in Europe and US. And in the Asian markets, they're able to do nothing because of the unstructured nature, and that's what we are solving. So that large financial card company is now our partner in terms of providing intel at a card level. And they are signing us up for India, Asia, everywhere. And that's where the geographic impact which we are making. And today, together, these 3 markets present an enormous opportunity of around $6.5 billion in terms. Now, this is most of our companies. Today, we are at a stage, especially enterprise tech, trusted by over 50 plus enterprises where we are working all across the large-scale companies. From last year to this year, we are, looking at almost at a 2x growth in a quarter-to-quarter basis. And all of this is, from a deep tech company's perspective, when you're building, and let me go back to the investor story. When we were out of Jadavpur, we just had an idea. We had some experience in analytics. We wanted to work on it. There was one enterprise which was probably going to give us that revenue because they were willing to work with us. But to sustain, when we started in 2020 March, or 2019 December, after 3 months, it was COVID, we needed to live for 2 years and to build this kind of tech. That's where investors come in. And the fact of the matter is that because there were people backing us during that time is where today we are coming in. And in our last round, I'm very happy to share that we gave our earliest investors almost 9x return in the 14 months' time. And that's the kind of impact that we can create. I'll leave at this point. Thank you for your time. Would love to connect and talk about it.
Thanks, Rajat. Well, can I have those chairs here, please? So last time when I was in Mumbai, I met Mukesh Bhai over a dinner. He told me, Suresh, data is the new oil, bhai. Tangent होके निकल गया, कुछ नहीं समझ में आया. Then I met Rajit. Then I got to understand that what you actually mean by that data is the new oil. Now this is one company which is actually taking data all out and earning revenue out of it, right? Literally revenue out of thin air if you actually calculate in that sense. So great, thank you so much, Rajit. Now we move to the next section of this event, where we'll have a panel discussion between the so-called whales of our industry that I know of. Right. Sharks has become so common, I'm using this whales, right? Because these guys have been there and done that. I'll give their introduction in a moment, but to give you some details in short, Pallav, he has been investing since 2009, since this keyword of angel investing was not a buzzword, right? Apurva is here from Google. He takes care of this complete, he heads the department where Google decides which company to invest in and not. Siddharth Aluwalia, he heads a fund, right? 100x entrepreneur fund, whereby I think you have lost 2 funds already. And just as a testimonial, one of the biggest investors that we know of in Kolkata, who is that? Mahesh bhai? One of the biggest investors of Kolkata, angel investors? Hamara Abhishek Saab, right? He is one of the most renowned investors. So as a testimony, even Abhishek has invested in Siddharth's fund. तो यार कुछ तो बात होगी, right? So let me invite all the 4 panelists up here on the stage. I'll take the liberty of reading out their profile to you, right? याद नहीं कर पाया इतना, sorry. हाँ? अरे मेरे कुछ बाकी ही नहीं पढ़ने के लिए. So let me invite Apurva here. Welcome, Apurva. Apurva Chamaria is the head of startups, VC, and private equity partnerships at Google India. Apurva has served in C-level roles at global organizations like Ranbaxy, HCL Technologies, RateGain, Tech Mahindra, and now Google. He was ranked as one of the top 10 angel investors in India by Economic Times in 2019, having invested in startups like Innovate, Joe Stocks, RateGain, Dukaan, Shiro's, BlueSmart, Kava Space, etc. Apurva has invested in 47 startups, and he has already exited 10 out of them. And is a LP in VC firms like Nine Unicorn, Jemba Capital, and so on. He has done his MBA from IMI Delhi and Masters in Advertising and PR from IIMC. He loves traveling and spending time with his family and friends. Now this excitement and fun of traveling is something that I find common in all these profiles that I'm going to read now. So can I invite Alkesh to please come and facilitate Apurva, please? Thanks, Apurva. Thanks. Now we have Siddharth Aluwalia. Siddharth started his first company in 2012. Siddharth's company got acquired by Shiro's in 2017. Siddharth served as co-founder and head of business for Shiro's till 2019. After that, Siddharth started 100x Entrepreneur podcast along with his wife Nancy in 2018. Siddharth, after Shiro's, joined Prime Ventures and later joined AWS. that is Amazon Web Services, as head of SaaS startup ecosystem of our India. He has done 38 startups investments from 2019 till now, 33 of them in SaaS companies. So he's one guy. If you need to validate any SaaS startup, there is no one better than Siddharth who can let you know whether that startup is really worth putting your time on or not. Can I invite Natwar here on stage, please? Okay. Mr. Anand Kulthia, are you here? Please, can you please facilitate Siddharth? Thanks, Siddharth. Now, Pallav. Pallav is a serial entrepreneur who has built and sold 2 companies. Again, he is a Calcutta boy. We call him the poster boy of Calcutta product ecosystem. He started Fusion Charts at the age of 17 without any external funding and scaled to 28,000 customers in 118 countries. And if you search online, you'll find that his product is being used by US past President Mr. Obama. So he was also one of the users of his software. He is also an angel investor in more than 100 companies, with multiple exits under his belt. Pallav holds an MS in computer science from the University of Edinburgh, UK. He has co-authored multiple books and has written several technical articles for international journals. He was also on the cover of Forbes 30 under 13 2014. Natwar, can we have you up here on the stage, please, to facilitate Pallav? So Pallav will be moderating this session. I'm sure Pallav has a lot of tricky questions for our other 2 panelists. Siddharth, yeah. So now Siddharth Pansari. He's a passionate entrepreneur, avid reader, and active investor in new ideas. Siddharth is an alumnus of Harvard Business School in career spanning over 25 years. Siddharth Pansari donned various hats, from being a leader, recruiter, manager, changemaker, and a custodian within various wings of the Primark Group. Primark Group, naam to suna hi hoga, right? Bring a good assessor and valuer of consumer insights, Siddharth has converted them into meaningful businesses and strategies, which has helped Primark acquire leadership position in their businesses. Over the years, Siddharth has supported around 50 startups and dynamic business ideas, creating new opportunities and employment. Can we have Vishnu Bhai up here on the stage, please? We are Calcutta heavy today. So over to you, Pallav.
Thank you, Suresh Bhai. So given that I'm sitting in front of a Calcutta audience, I wanted everybody to get on the same page first. So let's level the stage with first question. What is the difference between a dhanda and a startup?
A startup is a उम्मीद कि किसी दिन धंधा बन जाएगा.
See, a dhanda is a lifestyle and which sustains a family and an ecosystem. Startup is something which builds a nation. For example, tomorrow, if I talk 5 years back, nobody could have imagined that a food, medicine could be delivered to our homes in 10 minutes. Nobody would have imagined that we could order a cab and it would be at our doorstep in 1 minute. So these things are building the infrastructure for our kids. So this is startup and dhanda.
So, Dhanda is largely a cash flow business. Even if you set up a new plant or industry, you would expect a payback of 3 to 5 years. आप expect करोगे कि मैंने इतना capital डाला है 300-400 साल में वापस आ जाए. Startup could be far more longer horizon. स्पेशली अगर आप फ्रंटियर टेक में काम कर रहे हैं, deep tech, biotech, horizon could be far longer. So it's not a cash flow business. Secondly, Dhande mein you're constrained by the amount of capital you have largely, and which is what is fueling growth. Startup mein you can actually use leverage very, very well to drive exponential growth.
Perfect. So I'll add two more points there. Dhanda is a place where you look at कि कोई कुछ कर रहा है, let me go and take that market share. A startup is reimagining what the future can be, and it's taking an attempt at it. And not all attempts are successful. In fact, majority are not successful. But if that attempt becomes successful, it is reimagining a new world. Second, in most of the Dhanda, I think most of us will be happy with a 30, 40, 50% growth year on year. In startup, I think that's the absolute minimum. Most early stage startups go through 3x, 2x growth, 5x, 7x, 10x over the years, because that is how, as Siddharth said, startup later dhanda banta hai. So moving on to the next one, I wanted you guys to share your journey of angel investing, how you got into this, what were the early challenges, how did you learn? Because I have had a conversation with few of you here, and I heard 2 or 3 simple things. ये startup वाटअप समझ में नहीं आती. दूसरा, आप जहाँ पैसे लगा रहे हो हमें बोल दो. तीसरा, ये पब्लिक इक्विटी और स्टार्टअप तो सेम ही है, हम लोग को फर्क क्या पड़ता है. एंड आई वांटेड टू सॉर्ट ऑफ ब्रेक दैट मिथ फॉर ऑल यू गाइस सो दैट यू आर एबल टू, सबको यहाँ पब्लिक इक्विटी आई एम श्योर पता है, आप सब इन्वेस्ट करते हो, यू लाइक मैनेजमेंट है वो काम अच्छा करेगा, डेली प्राइस फ्लक्चुएट हो रहा है, आप खरीद सकते हो, बेच सकते हो, एंड दिस इज अ कंप्लीट रिवर्स ऑफ दैट. सो व्हाई डोंट वी गो अहेड विथ योर जर्नीज वन बाय वन.
So I wrote my first startup check in 2013, so 9-10 years ago, and it was actually in a Middle East-based data company. So it's called DataPerts. They were basically analyzing vast data and selling it to game developers to build games on it. So that was the business. And the way I got into it is I was sitting next to this person in our flight, and we were coming back from London, and he was talking about some amazing things he was doing. And we exchanged numbers and email IDs. उस ज़माने में Hotmail तभी भी चलता था. And he happened to visit Delhi. We stayed in touch. And I really liked what he was doing, so we raised a very small round. We raised $1 million that time, 2013. A bunch of us got together, funded him for future growth. And we also helped him with go-to-market. We opened new relationships in Eastern Europe. I really liked the experience of working with a founder, learning so much about a new industry. So it satisfied my curiosity for both returns and also learning new businesses. So that was my starting of the journey.
So my journey actually started a similar time. I don't know the exact year, but it started when Calcutta Angels was founded. I was one of the earlier members. And it more so happened with with a conversation that I actually had with the promoter of this building, Mr. Harsh Nyotia. So prior to 2012-13, I was a very energetic entrepreneur, and I felt everything in the world I could do. ये धंधा भी कर लेते हैं, not startup but धंधा कर लेते हैं. Let's do this, let's do that. And one day I was generally having a chat with him over coffee, and very nice conversation, and hold him in very, very high regard. And he said, Siddharth, life में आदमी एक या 2 ही धंधा कर पाता है, as a CEO of that business. So you have to decide which is a business that you want to run and which is a business you want to perhaps invest or have stake in. So that conversation said, I realized, currently at that point of time I was running 3-4 businesses actively as, the lead manager bol lijiye ya CEO bol lijiye. So that these are 1 or 2 businesses that I'll run. But obviously, sitting in Calcutta, you want to do more, you have more energy, you really wanted to do more. So I thought, I'll start doing startups. And if perhaps some of those businesses do well, perhaps I start increasing my stakes slowly, to hold significant stake. Never reached a position of taking a very, very significant stake. But yeah, started doing startups, and the only way you can start doing it is by investing. I realized, kabhi bhi, what do you call, a multi-bagger or a blue chip exponential return will not hit you, till you've done your first 4-5 startups. The learning in that entire journey was outstanding. For the one thing, suddenly I started meeting people outside Calcutta, because in our traditional businesses, our world, our dhanda, our world is very small. You meet people within a one circle. Suddenly you started meeting people, who were smarter than you, who had definitely more energy than you, who had more new ideas than you, and they were ready to take on to the world. and you started meeting funds on the other side. So it was a great learning curve, and that I think that learning curve has just begun. It's not ended. So even now when you meet startups, and a lot of them now you meet virtually, you don't even meet them physically. That time we met them physically. So it's been a great journey. It started through Calcutta Angels, then Indian Angel Network, then a lot of friends and family, say Apu, Abhishek, a lot of these people. And one leads to another, another leads to another. It's been a great journey. I really enjoy the journey. Obviously, money is a motivator. But the learning that comes out of the entire process of meeting people, going through ideas, and a lot of times you feel, "Arey, ye bhi ho sakta hai," matlab, and then you feel, "Ye ho raha hai," So I think it's a great journey. And we have always felt, traditional businesses, we operate in very, very competitive sphere. But I think startups operate today in a much, much more competitive sphere. So it's a great journey learning from people. That's how my journey has been.
It's very interesting you bring out the point that while money is a motivator, the other two things which I personally feel were good motivators for me, one is the vicarious journey. आप अपनी एक दो company चलाओगे, but आप जब invest करोगे, you're having not a driver seat, but a navigator seat in 50, 60, 100 different startups. And not to mention social parties में bragging rights. Oh, मैं first investor था Zomato का, और मैं first investor इसका था. So we underplay the bragging rights, which this also brings you apart from the vicarious learning. Sid, how was your journey?
I'll share a brief background. So I started my first startup in 2012. It was a software business. We were selling software for child specialists, pediatricians. And there was no such funding craze back then. So we bootstrapped the company. It was just 3 or 4 founders till 2015. We raised the first angel check in 2015. And then we launched the B2C arm of it, where a mother could access her kids' data sitting on a pediatrics desk on a computer. In 2017, we got 4 to 5 acquisition offers. We accepted one of them. And then I worked as a co-founder and head of business for the company. During just 1 year into the acquisition, I realized, right, as an individual, I love growth. And that's my key motivator in life, why I do what I do. And in an acquired company, the growth was not happening. So I, along with my wife, right, said, before starting and my wife was also in my professional journey as well, right? Before starting our next company, we should at least learn how to grow 100x, right, through other people who we could tap into. And what I went is, I first went to my investors, जिनका मैंने पैसा return कर दिया था. They were happy to host me in their offices. That how they think of investing, and I used to record on mobile the conversation between me and them, and that became 100x Entrepreneur Podcast, which is India's fortunately largest podcast today, world's 5th largest in startup domain. And then one after other, I started interviewing VCs. And the motivation was very selfish, that I wanted to learn from them what it takes to grow 100x. Then in 2019, once I had exited my own company and got cash, so I was clear that this money, what I had earned, is from startups, and it should go back into startups. So, and I was clear that as an individual, I will hold very little say. But as a group, if I can invest $200,000 to $500,000, then it becomes very impactful for a company. The first company that we invested is Airmeet. And the frame of looking for me was, I always regretted exiting my company early. And as a first-time founder, you regret it. Like Pallav, you have also exited a couple of companies that we sold early on, and because we haven't seen cash for a long period of time. But once you exit first time, the second time you become a founder, you are little financially free, then you are building a business for your lifetime. So I decided to invest in second-time founders who like 100 crore, 200 crore exit doesn't make a difference in their lifestyle, and who are thinking of, इस बार तो company IPO लेके जानी है. So my first investment was Airmeet. The founder previously had exited his company to Quicker for a $200 million deal. And yeah, the lens I look at is, can this company become a 10 million yearly revenue company? The Airmeet today has crossed that milestone.
Nice. Apurv, sorry. How do you source and evaluate startup deals? मतलब हर जगह से आते हैं, दोस्त लोग बोलते हैं. So how do you first get your deal flow sourcing right? then what sort of evaluation criteria do you put, and what sort of diligence do you do before you put money into it?
So I do very few deals now. I do 4 to 6 deals a year. 100% of my deal flow is through founders. 100%. Even if I do it through a syndicate, like I've done a couple with Cedars, for me it's not Cedars, it's Abhishek, Shirish and Alkesh as founders. So I have a very founder-first mentality. All the deal sourcing is through founders. Second, huge bias for action on founders who are good in go-to-market and sales. My thesis is that a company with a better product will always lose to a company with better sales. So huge focus on who's the business development person and how good are they in sales. I only do tech. I've recently done a non-tech deal, which is a cannabis company. More for spiritual reasons, but only tech because it's non-linear. I don't follow fads. So if I don't understand it, I don't do it. Period. कोई शर्म नहीं है, मैं मारवाड़ी, so नहीं समझ में आ रहा, नहीं करूँगा. It's as simple as that. I have a very superficial understanding of Web3, crypto. I have not even touched crypto and Web3 with a barge pole. They are friends and their colleagues who have made like a lot of returns in Web3 and crypto. I have not got into it. Limited time, you can understand limited things. I understand SaaS, I understand fintech, I understand gaming, I understand consumer internet. So that's where I invest. So founder first, tech, invest in what you understand and invest in founders who are very good at go-to-market and sales. Yeah.
Got it. How about you, Siddharth? What's your deal flow and what's your selection and due diligence criterion?
So honestly, like not being able to give it that much more time and attention to actually connect so much with founders and not being from the tech world has not helped me with that visibility or that access to founders. So it's largely been platform based, whether it's an IN today or a Let's Venture today. And some obviously come through family and friends. Consumer is a space I feel I understand better than many other things. So perhaps those are larger bets which we've been able to take as 3-4 friends or otherwise also. Tech is largely which you really would want to understand, but I'm not great at it. So for that, you would follow syndicates or perhaps the Cedar syndicate or other syndicates or platform which helps you. Largely, based on earlier experiences, want to avoid writing that first check. It's better to let that 10 crore valuation company go rather than, so you don't do, happy to let, reduce my mistakes, if one exponential big billion, it doesn't matter. That's my learning. Also, I really avoid companies which really burn a lot of money, where they don't know if they do not get a funding in the next 12 months, they'll not be operating. Avoid those companies. At least look at companies which, with the round that they're currently raising, can operate at least for 24 to 30 months. If you know that this company will not be able to operate after 6 months if it doesn't raise its capital, I normally tend to avoid them because I'm not really sure what we are getting into. That's normally what I've been doing.
Great. How about you, Sid? So just before that, if I may just tap onto one more question. So you said you put very limited amount of time in this, given that you're running your own businesses. Sure. How do you, so for, let's say, I'm assuming most of the folks here have their own businesses. If you have to sort of give them a framework, ki apna dhanda kab karo aur startup saptah mein kitna ghante karo, how do you go about that? Both from a deal selection flow, then evaluation, management, helping them further. What framework would you give to them?
See, apna dhanda kitna karna, that only that person can decide. And in Calcutta, you'll find people across the spectrum. Somebody will have 2 hours vacant time, and you'll find people who have even 10 hours of vacant time. 2 baje baith ke club mein tash khelte. So there's a very different spectrum that you're talking to Calcutta on a practical basis. So I'm saying, see, you have to enjoy what you're doing. There was a time when I was president of Calcutta Angels. Honestly, 2 hours a day or 1.5 hours, it used to go and you doing curating and everything. But then you realize, so it also depends on how much capital you want to deploy. So of your net worth, of the, where do you want to deploy, how much you want to deploy in equity. So, if suddenly you want to do equity also, you want to do private equity also, you want to do startups also, and you start giving 1 hour. So, to each his own. I'm not a person to give any opinion on this to anybody. Each one has to decide. But if you want to give less time, then the platform, there will be some people who will go with a carry. You have to part with something. Yeah. It can't be I have the cake, I'll eat it too. So then you go for people, which are good funds also, which invest in startups. There are good funds which invest in little matured startups. And there are good syndicates also. Cedars is one of them. I'm sure there are many more in the country. So if you want to give less time and you want to leave it on to experts where they've done that amount of diligence, they've, chosen 5 out of 100, then you have to believe on other people to take it forward. That's what I'm doing.
Got it. Back to you, Sid, on your deal flow and evaluation.
So my deal flow is sitting in this room. Pallav Bhai and Abhishek Dada. So I think before deal flow, there is a fundamental thing is trust. How you build trust, with your partners in the ecosystem. So I started building the trust with the content that I built through 100x Entrepreneur podcast. And then for me, through other founders. So you need to have a group of 10 to 15 close people who you share your ideas with, the companies that you are thinking, how you are thinking. For example, when I shared any company with Pallav, so Pallav used to ask me, so do you have a write-up on it? So I used to build a write-up on that and then share it with Pallav. So you have to put some amount of work, build that layer of trust, and be very open with your group of 10 to 15 people who you are working with. Then, the second part is evaluation criteria. So there's a saying, right? Invest in lines and not in dots. For example, if today you meet a very energetic, enthusiastic, good storytelling founder and you want to put money right then and there, I would say hold. Hold for a few weeks, and even if the deal passes through. Because unless and until you have seen a pattern, the first pattern is consistency in execution. Second is how has the vision evolving over a period of time. And third is the learning ability. So what I do is I rely mostly on second-time founders, where I have a lot of data points to go back and check on how did they treat their previous employees, right? How did they execute? What is the ARR that they executed, built in their last company? How did they treat the buyer? Was the buyer fooled into something? So yeah, data. And for first-time founders, it's again, you have to put in the hard work of doing a lot of due diligence, talking to contacts, talking to 4 other companies in the same industry. What are they building different? I would say this is investing is not an excitement-driven game. Investing, if you could treat as, seeing grass grow or seeing the paint dry on a wall. If you can treat it, then you are in for a long run.
Okay, that leads nicely into the next question of what mindset does a investor then need to have to start investing in a startup? And let's also load this question up with how do you assess risks कि यार यहाँ तो पता भी नहीं है कब पैसा आएगा कब नहीं आएगा ये तो लॉस करते जा रहे हैं एंड लॉन्ग टर्म में आएगा नहीं आएगा there's no daily price ticker saying कि ये startup ऊपर नीचे गया. So how do you build that mindset? How do you convince yourself about that risk? And what are some of the rookie mistakes that you think people who are early in the startup investing journey should avoid?
So for me, investing is like a test cricket. It's just not 5 days, it's maybe 50 days. The first rule of wealth creation is not to destroy wealth. So I typically invest in one company out of 100 I evaluate. That's my... so Shirish Bhai was asking me that you have a 25% hit rate in terms of exits. I personally think that's not great. I don't look for founders who want to IPO. That for me is a disaster. Because very few companies will IPO in 4 or 5 years. Warning sign is if somebody wants to IPO, then I'm not the investor. I'm looking for founders who will consistently raise money every 6 months. So if you're not going to raise a round every 6 months, it's a warning sign for me. Either you're not very ambitious, or you're not growing fast, or you're not thinking big. You're optimizing for other things and not growth. And धंधे और startup में ये फर्क है. Startups need to optimize on growth. So वो बहुत critical है. I completely love Sid's line. We are looking for lines and not dots. So typically whenever a founder tells me, I'll do 1,000 crores, I'll do 10,000 crores, the market is 70 billion. First thing I do is I discount it by 70%. And then I say, is it still large enough? Is it still exciting enough? See, founder as a psyche, you are meant to have insane amount of self-confidence, vision, but there are many things which can happen to you which might ensure that you don't fulfill your vision. As an investor, will I be okay with 30% fulfillment of the vision? 70% तो मैं discount कर ही देता हूँ. Because अभी एक meme circulate हो रहा था that Excel is the most creative way to do paintings. आप कुछ भी बना सकते हो, right? You can कितनी बार तो error से ही हो जाता है, वो pull करते करते number 1 0 और add हो गया, 2 0 और add हो गया. When I look for founders, I look for mental strength. It's a very, very hard journey. So one of the founders which Cedars also invested, I was one of the early investors. They were flying very high. They were doing 60, 70 crores in revenue. Facebook hit them with a $50 million lawsuit. उसके 1 महीने बाद COVID started. Ad revenue collapsed. They had to retrench out of 200 employees, 170 employees in 1 week. The founders had to sell their houses. All 3 of them went into clinical depression. A bunch of us investors stuck with them. They came back and they've raised a very big round recently. ये resilience अगर नहीं होगी ना, being a founder means you're your own cheerleader, you're everything from the gatekeeper to the CFO to the head of strategy. Like Sid was saying, right? You can say chief manager, founder. You really, really need to be, कोई कुछ भी बोल ले, you need to be shameless, overconfident, best cheerleader for yourself. That mental strength is what I look for.
How about you, Sid? So what mental mindset should an investor go in with? How do they convince themselves of itna risky kyun kare, and what are some of the rookie mistakes that you have seen as an investor?
Sure. So I think one to see, it's about risk and return. Okay. So there is no doubt that this is the riskiest asset class that you can think of. Number one. There are FDs at 4%, there are FDs are also 6%, and there are, one of those small cooperative banks at even 9%. Some people are very happy buying ICICI Bank क्योंकि यार हमको पता है गिरेगा 10% गिरेगा, ऊपर होगा तो 10-15%, and similarly there are shares which go 50-60% down and also go 50-60% up. It's a different story कि अभी तो everything was 50-60% down till a month back. So I'm saying one तो what I've learned through the hard way कि it's the riskiest amount of money, any investment that you can do. Also the most illiquid form of investment. Any share which is now listed, you can sell and get out any day. You buy any property, you can sell out on a heyday. At COVID, you wanted money, you could, sell off anything, starting from gold, jewelry, housing. There was a buyer at a price. In this, because there is no market value determined, and at the last day, it's difficult to find a buyer until unless, you are a Flipkart, that level of company, and if it's not doing well, then it's very difficult to exit. So one, I have seen, so I only invest that much amount of money which I know even if it's not available for me, I have no regrets. It does not spoil my business plan. It does not spoil my personal lifestyle. It does not come and hit me back, कि मैं क्यों किया, it should not spoil your existence. So start investing a small amount, whatever suits you, thinking that this money is not there with you. The advantage or disadvantage in this business, either the startup will give you money or it will not give you money. It can go zero, which is not in the case of normally out of 100 equity shares that you'll invest, only one might have a situation from 10 it might go down to 2 or 3. Rest will stay around the 6-7 mark. Some will do better. So this, if it does well, it really does well. If it doesn't do well, It will not do well. There will be very few startups where you'll, exit. If you invested 100, you exit at the same valuation at 100. That will be one out of the 100 cases. That's number two. Number three, just to add on to what Apu said, stability. Now we really look for, to build a business, which we've learned the hard way. Businesses get repivoted, whether it's a dhanda or a startup. It starts with something, ends with something. Zomato started at a restaurant and menu discovery platform to a food delivery platform to a supermarket grocery delivery. So businesses evolve. In our own businesses that we do, start somewhere, we reach somewhere. So 4-5 साल तो 3-4 साल तो एक्सपेरिमेंट में जाता है. 5-6 साल बाद दिमाग और बुद्धि स्टेबलाइज होता है कि यार ये करना और ये नहीं करना है. In any business you will realize मुझे क्या करना है very early also, but after a period only you will realize मुझे क्या नहीं करना, what are the things that I don't want to do. And then from 7th, 8th year is what I've seen, businesses start to stabilize, whether it's our own businesses or the startups that we invest in. So the startup should have that mentality of that founder कि मैं 7-10 साल चलाऊंगा. A very anxious guy, a very impatient guy running on to the next ship, that's not so. So adding on to stability, whether he has it to go through that ups and downs, to run it for 7-10 years, that level of patience. And there are many stories like Apur mentioned, startups writing it off, bouncing back. In fact, Spinny as a startup was almost written off. They did a down round, from the earlier valuation to now become a $2 billion company. So there are many experiences like that.
Got it. How about you, Sid? Risks, mental models, rookie mistakes.
So, I believe everyone in this room would have heard about Warren Buffett. How about Charlie Munger? Would you know his partner, Charlie Munger? So, he follows a very simple rule of investing, which I also learned from him, called invert, always invert. So, the first rule is anything multiplied by 0 becomes 0. So, you don't have to get in a situation where you reach 0. So, if you start investing today in startups, make sure that that amount that you invest, if it goes all haywire, shouldn't make you 0. The second is, being emotional about any founder or any investment, because the market doesn't emotionally care about any of such factors. So you have to take a very pragmatic view. The third is, don't go after big names and tier 1 VCs, because those guys are also getting 90% of their fund return from only 10% of their investments. So if you are blindly following anybody, you are in for a big 0. The third is don't go ad hoc. So what most people do is 2021 was a bull run. So people started calling left, right, and center. Pallav would have received like hundreds of calls during 2021, and in 2022 people just don't, say ki, I want to stay away from this. So what happens is when media is the most bullish, then you have to be most scary. This is again one of Charlie Munger's and Warren Buffett's principle that media is portraying that one unicorn is being born every day in India. Then you have to be the most fearful. And today, when people are lashing out on Zomato for 40 rupees, that Zomato price is cheaper than tomato. then you have to be most greedy. So, and why is that? Because the media distorts our perception. So, if you can follow consistency, like I have been consistent, every year 12 to 13 investments, right? And by 3rd or 4th year, you will start seeing, those 10x, 20x consistent multiples in few of your investments. So if you are here in this journey for, let's say, at least a 10-year time frame, then only go in, step. There is no such thing that 1 year you are extremely excited and the next 2-3 years you are gone from the market. Neither you will be able to build your deal flow, nor trust, nor reputation. So these are some of the frameworks.
That's beautifully put. I think I'd like to reiterate a couple of points that all you said. So 3 simple things I would sort of ask you guys, you folks, to consider. One, don't invest everything at once. अगर आपके पास 100 रुपए हैं, ये नहीं कि 2 स्टार्टअप है 50-50 लगा दिए. स्टार्टअप्स में आपका हिट रेट रेशियो 25% is very good, अपूर्व. स्टार्टअप्स में there's something called power law. So आप जब equity में invest करते हो, as सिद्धार्थ here said कि 2% ऊपर नीचे जाएगा और टका पता नहीं, परसेंटेज 10-20% ऊपर नीचे जाएगा. एंड बट इक्विटी में अगर आप इन्वेस्ट करो 10 इक्विटी में, आप सोच रहे हो कि कोई भी इक्विटी जीरो जाएगा और गया तो बहुत ही दुख होता है। स्टार्टअप्स में उसका उल्टा है, अगर आप 10 में इन्वेस्ट कर रहे हो, 6 जीरो गया गया कोई मतलब नहीं, आपको वो 6 में टाइम भी नहीं यूज करना है, पैसे भी नहीं और लगाने हैं, आपको वो 2 चाहिए जो 100x रिटर्न करे, और बहुत ईजी है in the sense of how many startups have returned 100x when you invest at angel stage. So in equity, you're trying to protect your downside. In startup investment, you're trying to maximize your upside. 10 में 6 मर सकते हैं, 2 में भी कैपिटल रिटर्न करेगा, बट जो 2 अच्छे वाले हैं, that will cover the entire spectrum of all your losses and will give you a much higher IRR and percentage. So which is why you need to spread your bets well enough. अगर आपके पास 100 रुपए 50-50 2 में नहीं, my personal maths driven model is at least divided it to 27. So अगर आपके पास 100 रुपए हैं, हर स्टार्टअप में 3-3 4 रुपए करके लगभग लगाओ, एंड जब वो स्टार्टअप अच्छी कर रही है, आपको प्रो रेटा राइट्स मिलता है टू री बाय इक्विटी, उसमें और डालो। बट अच्छी कर रही है नहीं कर रही है, उसके लिए यू विल हैव टू हैव अ सेंस, either get some updates from the founders without pestering him, or you have to help the founder in one way or the other, so that you know किस में डालना है. So the thing will happen is जो स्टार्टअप अच्छी कर रही है उसको फंड करने के लिए पूरी दुनिया आ जाएगी, तो आप अपने खाली प्रो रेटा यूज कर सकते हो, और जो अच्छी नहीं कर रही है वो आपके पास पैसे मांगने आएंगे उसको, क्योंकि दुनिया दे नहीं रही है, बट आपको भी देना नहीं चाहिए, तो आपको ये पता होना चाहिए कि किसको देना और किसको नहीं देना है. एंड दैट यू कैन ओनली डू वंस you put some time in the startups that you invest in, or जिसके if you have done as a syndicate or as a fund में तो anyways you don't have to make these decisions, but where you should know कि क्यों invest करें, what is the next round thesis, क्योंकि वहाँ पर all the startups which are doing well, वहाँ पर आपका initial amount में you're going to get a 50-100x, उसके बाद आप जब second round में करोगे maybe the absolute number is higher, it will not be a 50-100x but 25x on a higher absolute, and that is how you build up. Third, and this is also very relevant, अप साइकिल में सबको एक्साइटमेंट आ जाती है, ओ जोमेटो ने आईपीओ किया, मेरे दोस्त ने 100x बनाया, 200x बनाया, हम भी इन्वेस्ट करते हैं. स्टार्टअप्स ऑल्सो रन ऑन साइक्लिक थिंग्स. सो 2000 में .com क्रैश आया था, 2008 में GFC आया था, 2014 में देयर वाज अ फेड मार्केट क्रैश, शॉर्ट वन, 2020 में कोविड आया. सो वो 100 रुपए भी जब आप लगा रहे हो, put it in a cycle of 5 years so that you are seeing ups and downs. And when I say 5, it's not a hard rule, between 5 to 7 years, so that जब valuations up भी जा रही है, you are able to pick some of them. जब down भी जा रही है, you are able to pick some of those startups. Equity में जिसको dollar cost averaging बोलते हैं या rupee cost averaging, यहाँ you want to see a full cycle of startups so that you are able to invest in different stages of the startups. और ऐसा नहीं होना चाहिए कि 1 या 2 में लगाए and you're like कि रिटर्न मिला ही नहीं, because startups are a very long journey. It takes 5, 7, 10 years for you to get that 100x. So ये नहीं कि 2 साल लगा के then you're like यार इसमें तो कुछ हुआ ही नहीं, and it's like not investing in Bitcoin early days and later saying अरे ये तो 600 गुना बढ़ गया. So you have to be very, very cognizant of this. So let's move on quickly to the last 2 topics, 3 topics actually we have. One, which is a raw nerve, talking about valuations and profits. How do you justify crazy valuations of companies and the ones which are not making profits, and how do you look at companies not making profits? What is the lens from an investor to look at it? Because हम यहाँ सोचते हैं बाकी दुनिया पागल है, क्यों इतने justification मिल रही है valuation की, but obviously there's a mental model and a framework to it. How do we go about it?
So I think there are 2 things, right? There is a GM and there is a NM. And the difference, of course, all of us know that cost of sales and marketing. First thing is, if somebody is not being able to make money at a unit level, then it's really concerning. It could be a different case if it's a completely new product, they're spending a lot on R&D, and they're pre-revenue. But if they're already in the revenue cycle, and at a unit level they are not making money, there has to be a very good reason. Their CAC has to be declining over time. They have to be becoming better at sales and marketing. The second lens through which you look at these companies is, if they are not profitable now, do they have a path to profitability? Path to profitability could be, hey, if we do these 5 things, we'll become profitable. And we know how to do these 5 things, and these are the quarters in which we'll do these 5 things. So when you enter a new country, a lot of SaaS companies, when they enter US, if they're not doing outbound from India, they typically end up hiring expensive salespeople. A lot of sales experience in SaaS, which I've had, shows that typically 75% of your first hires will be wrong. पहले 6 महीने में तो कोई sales आएगा ही नहीं उनसे. So either you will hire them from a wrong industry or from the same industry, but पहले वो इसलिए sell कर पा रहे थे because they had a big brand behind them. Now they don't have a big brand, you are a startup, they are unable to sell. So will the founders have high learnability? It's okay to make this mistake, but what would be the quantum of mistake? Will they be able to improve their sales and marketing go-to-market? So path to profitability is very important. And path to profitability has to be very, very granular. It can't be a superficial slide with 3 lines, which says that, we'll slash our cost, we'll do this. That doesn't work. It needs to be a very, very granular AOP, annual operating plan level, with multiple line items, with dates, with owners. Without that path to profitability, I have seen most companies never becoming profitable. And they will keep saying, like Twitter, we'll launch this new product, this magic bullet, that feature, suddenly we'll start making money. That doesn't happen. In my experience, that usually never happens.
So I normally tend to prefer, companies which have a larger path to profitability compared to people who are burning money. Each investor, based on his approach, what he's seen in life. So somebody is from the tech field, he'll have far more visibility of what is going to happen compared to somebody who's not from the tech field, and that's absolutely okay. So businesses that you understand, you'll understand valuations and numbers far better than what. So you can start investing in what you understand. What I normally try to do, I try to invest in companies, 80% of the companies that I've invested in, the base valuation, the first day that I would have walked in, would have been below 100 crores. There would be very few, which have invested when the valuation was 200 or 250 crores. So, when you're at that range of valuation, some amount is gut, some amount is, industry, some amount is founder, some amount, then somebody else also, many people writing checks at that value. I normally try to avoid companies beyond that value. And if the same companies come for reinvestment, like Pallav just said, either pro rata allotment or, raising a next round, you can track it with the progress that the company has done, whether on profitability, whether on matrices, whether on sales, and reinvest till a value of 300-400 crores. After that, I normally don't, reinvest in a company. Some amount of pro rata allotment, again, based on company to company, I keep doing. But after that valuation, I practically am not able to evaluate it, or I'm not a best judge, so I tend to avoid that.
Got it.
I follow one more rule that the best startups where I want to invest, I have to fight for allocation. I have to convince founder and use multiple sources to take, convince him to take my money, right? So because then I know that he's not taking me for my money, he's taking for some other value that he sees, right? And any business, if you see, right, if a startup, right, there's a lot of startup craze right now, but if you project 20 years into the future, the startup will be valued on free cash flow that is generate. And why are startups valued so much in US, and that's why we adopt that model in India. So Google, Facebook, Apple, any large tech company that you take in US, they generate billions and billions of dollars of free cash flow. And using that cash flow, they are able to build one business after other. They are able to do hundreds of experiments, for example, Amazon. And then they are able to, acquire companies using that free cash flow. So you have to think of the same model that can the startup which I'm investing today generate free cash flow 10 years, 15 years into, and that can't be done by burning money on customer acquisitions. The other thing is, right, on high valuations. So one is high valuation driven by FOMO, and the other is high valuation driven by the quality of the founder. Has the founder built previously 100 crore annual recurring revenue business? And because he has built previously, that's why the market is giving him or her a higher valuation today. So it's, in my opinion, it's very okay to give such founders the valuation that they ask. Because previous business, they might have taken 7 years to go to 100 crores. This time, they learned the playbooks and will take it in 2 years. And a startup value, ultimately by the next set of investors, will be measured by growth rate in the business. If a startup is growing 10x year on year, even in such markets today, they'll be valued like 40 to 50 times of their revenue. So try to optimize for the quality of the founder that you want to invest in. I would not say be over bullish on getting in a cheap valuation in a business.
That makes sense. On a lighter note, profit is the figment of imagination or lie that a startup founder tells to the investor in the early stages. Valuation is the lie or figment of imagination that first round investor tells to the second round investor till he finds a greater fool or till Fed Chairman Jerome Powell hits him in the face. So we'll close this with the last question here for all of you folks. Given the group here, I mean, many of them have invested in startups. Some might be sitting on the fence. What is that one advice you'd give to people sitting on the fence on to take the next step forward?
To investors or startups?
To investors.
I'll say go back and make a commitment that you will start seeing minimum 2 pitches a week. Minimum 2 pitches. Over 6 months, you would have hopefully seen 20, 30 pitches. It'll start shaping your thinking. I think we learn a lot from the questions which other investors ask in the call. And don't be tempted to pull the trigger, but at least take that step. Join a couple of syndicates so that you start getting the deals. No bias, but CETAS is one of the best, so do join them. Do join a couple of others. Pick out one or two sectors which you find exciting. And make a commitment that you will do at least first 2 deals within the next 6 months. Commitment to yourself. Even if it's as small as 5 lakhs, 10 lakhs, do it because it's a cost of learning. If you get lucky, those startups do well, great. Otherwise, you will at least analyze what went wrong.
So my input is do only if you enjoy this. Okay, don't have any FOMO. Whatever business you are doing it, and if you do it well, that will give you the maximum return. And that is even if you saw Shark Tank, Anupam Mittal also said, compared to investing in any other businesses, the returns in our business are the best. So if we are 10 close friends, 2 of us, invest in startups and we enjoy and we do it, so it's okay. So don't have any FOMO. You're not missing out on anything. If you
because bragging rights कहाँ से मिलेगी?
Sorry?
Bragging rights कहाँ से मिलेगी?
वही मैं बोल रहा हूँ. So do, if you enjoy this, you want to do this, obviously, and I would add to what Apu said, if you really want to invest over a period of time, start educating yourself. There is a lot of content available online. You join Let's Venture, 10,000-15,000 rupees or 20,000 rupees a year, similar IEN. You start seeing a lot of it before investing. You can educate yourself. But don't get bothered कि my friend has done this, he made 100x. वो ऐसे ही है. If I'll compare to my friend who's 100x, it doesn't matter. What matters is reality. So do what you enjoy. Don't have this FOMO. Also remove biases. If he's invested, he'll make money. He's made money, I'll also make money. वैसा नहीं होता, my friends. So remove your biases. And if you enjoy, do invest. If you don't also invest, it's okay. You're not missing anything in life.
That's straight from the heart, said that.
Yeah.
What do you say? What do you think? This one advice you'd give.
So I would say don't expect any return till you make 50 investments. Right? Because this is such a long-term game that unless and until you see your first 50 investments over a period of 3 years, 4 years, 5 years, 6 years, right? Do it because, as Sid said, that you enjoy doing, you imagine a different kind of a future. So this investing is not for people who believe in status quo. This is for people who imagine a different kind of a future, a better future, or an alternate future for our children.
Can I decide on?
Yeah, sure.
In terms of experience, this is the most relaxing investment. Okay? Like my wife started investing in gold. Now every morning she'll go, gold kitna hua? Okay? If you start investing in equities, you share every morning, then mein 4 baar you look at money control. Here there is nothing to look at. Okay? So it's the most relaxing experience. If you've done a portfolio, you just invest, you apply your mind at the time. Depends again how much you want to actively involve. and you don't know uska kya value hai, and you just, so it's very relaxing. Even when COVID happened, you saw all stocks going down, you're wondering boss kya hai, and you're applying your mind ki कब बेचे कि नहीं बेचे, यहाँ सोचने वो ऑप्शंस नहीं है आपके पास. So it's the most relaxing investment after you've done it. So if you can enjoy that ride, it's a great ride.
It is like watching a cactus grow. So anyways, we'll end the session here. Thank you, folks. You've been a very patient audience. Oh, sorry, Q&A, yeah. Anybody has any questions, feel free. Can somebody just pass the mic around? Please also say who you want to answer the question if you have any specific person in mind.
Very big liquor bottle there. The best question doesn't get it.
Hey guys, so I found this very fascinating, very interesting. Sid, you mentioned that your thesis revolves around second-time founders and IPO karne, like they have that vision. And then Apurva, you mentioned that like you don't want to touch anyone who wants to do an IPO, and everyone has a story, like you can paint on Excel and all that. So how do you go about, like how do you tread that fine line between, how do you delineate between like a vision and an exaggeration with startups?
Basically, he's asking, how do you cut through the bullshit of a founder? Is that right?
So he said that Apu said he doesn't look at anyone who's touching an IPO vision.
Talking about like an IPO, or you said that you work with second-time founders because unko hai ki is baar to IPO karna hai.
Yeah.
So how
So-
do you tread that line?
So first is it's not binary between me and Apurv. So in this game, both Apurv can be right and I can also be right, right? So it doesn't have to be like that. And second is you have to build your own thesis of what you are comfortable with, and it can be different from me and Apurv. It can be completely adjacent, tangential to what, and you will build it over a period of time as you start documenting your thoughts, your experiences. For example, Apurv as an angel investor, right? He's responsible for his own money. I run a fund where I'm responsible for other people's money. So my goal is to, return that fund 20x. So for that, we both follow a very different path, and we probably both can make $100 million.
If I may just add to it, the analogy in stock market is आप stock market में day trade भी कर सकते हो, long भी खेल सकते हो, short भी कर सकते हो, arbitrage भी कर सकते हो. The goal is making money at the end of it. The strategies are based on, do you want to look at a screen the whole day? Do you want to fill it, shut it, forget it? What kind of person you are? What is your risk appetite? Not just from a financial point, also from your own personal point of view. What stage are you in life? किस में मजा आ रहा है?
And stock market up, you can take leverage and do it also. This is not a business to leverage yourself. If you have any debt, even 100 rupees of debt, to take debt and do it. Amish Tripathi, you've heard of Amish Tripathi? He wrote in his book, and I quote him, ki, there is my truth and there is your truth. There is no universal truth. So इस धंधे का या investment का कोई, what works for him will be like, he might invest in tech companies, I might not touch tech. Still, both of us might do well. It's not, similarly, I being in retail, don't invest in retail companies. ठीक है, because so a lot of each person has biases, something works for him, something understand these, both of them are very matured investors, very, very matured investor. I and you will not be that matured investor. So that with that level of maturity and that level of experience which they've gathered over 20, 25 years, they've got good views, they've got developed some biases also, and backed by some logic. So that logic will work for him very differently than it will work for him, but it might not for both of us because we are not that matured an investor.
See, I'll just qualify my statement. I invest in hyper-growth companies. For me, if a founder is talking about 100 years and wanting to leave behind an institution, it's great for others. And they can go to a bank, get an overdraft, do whatever they want. I'm really looking for investors who want to give me an exit. I don't want bragging rights, I want money. So I would hate it if I've invested in some and then I waited and then they went IPO. So very focused, below 7 years exit cycle. 7 years is also too long. A lot of theoretical books say 7 to 10 years, 11 years. My whole thesis is catch them young, make sure they're aggressive. At least one of the founders has to be exceptional at fundraising. If any team does not have an insane fundraising person, it doesn't qualify my test. Because it's okay, they'll run a good business. They'll turn profitable. My exit will not come. My exit will only come if somebody else values it at 20x. So one of the founders has to be an insane fundraising machine.
Hi, thanks. Great discussion, by the way. So I have one question, just building on this whole founder mindset that you spoke about, that you're trying to look for mental resilience. And given that across India, everyone's starting something up today, you may not get the chance to meet someone more than 1 or 2 times. Founders who are in demand, you don't get a chance to talk to them maybe, and you have someone else who's mediating. How do you kind of test for that, and are there any red flags to look out for? Thanks.
So a large part of my investments have been with founders whom I have known for some time. So there are also investments where I've met founders once and twice and gone and done it. I typically get back into their backstory, like what kind of upbringing, and I'll give you a famous example. So Nikesh Arora, when he was still running SoftBank, he was in Delhi, and there was a dinner with Shekhar Gupta had hosted. Shekhar is a journalist for him. So I parked my car, this was at a fancy restaurant, and I see a Ola come in. And 3 passengers get out, and then beach se Ritesh Agarwal from Oyo gets out. It's a shared Ola. So I met Ritesh after some time, so I was like, what happened? Your driver didn't show up? I was just making small talk. He's like, nee, Apur, you know, I like taking the shared ride because I get to talk to the users. Do you use Oyo? Why don't you use Oyo? What's wrong with Oyo? I was like, wow. So there are many ways to test for great resilience. If any of you have run a tech business and sold to Walmart, so I've done many sales calls and gone to Bentonville to sell to Walmart. Walmart, when you're meeting a senior director, VP, and you're trying to sell IT or whatever, they make you pay for the coffee also. लाएंगे $2.50 कॉफी के लिए भी चार्ज करते हैं, कोई शर्म नहीं है. धंधे की बात, इज द फाउंडर डूइंग धंधे की बात, कितना डिटेल्ड हैं, आर दे सुपरफिशियल, व्हेन यू स्टार्ट ट्रिपल क्लिकिंग going down, can they really go down? And as an investor, I love asking stupid questions because it's a free university. And every time you ask stupid questions, you learn. At times, your biases get corrected. You always think कि ये ऐसे ही हो सकता है. But 2 other founders succeed and tell you, नहीं, ये ऐसे भी हो सकता है. So, I think lot of good questions, background checks, I also cyber stalk them on social media. So just to see, what's the quality of commentary? Even if they're posting on LinkedIn, is it like general stuff which everybody is posting? How dense is their content? If they're writing 5 lines on LinkedIn, does it educate me? Does it inspire me? Does it inform me? Or is it general, just adding to the noise? So this पता चल जाता है.
I'll just add to, this is a very matured way because you might have that access to that level of founders and startups. But even if that is not there, suppose your dad wants to get you married to somebody, you'll find a way to find out about the girl even though you've not met her. Okay. Similarly, if you invest even 15...
That's a very Kolkata answer.
You will find...
You're reading the room well.
You'll find a way out, and you'll find many ways out. You'll ask some friend or somebody, and LinkedIn, 3 levels of connection. So I'm saying there's so much content available on digital media, whether it's LinkedIn, whether it's, So even if you're not able to go, because, like a lot of startups that I am currently, I'm not as matured investor as he is, you're just looking at startups on the Let's Venture platform. You're looking at an online pitch and tech, you're investing. You're not meeting the founder also. So you might not be able to see those kind of experiences. But there is enough content available, like there'll be user reviews if they're selling on Amazon. There'll be videos available. On YouTube, there might be nasty experiences. There's a lot of content available. And if you give half an hour can find out about the startup, the product, the founder. You'll find some connection if there is an intent.
See, if it's a direct deal, pay 200 rupees, at least pull out a MCA report on their filing.
Guys, hi. Lovely session. But of course, very non-technical. Many of us here, I mean, unlike as Siddharth is claiming himself to be a fairly newer guys than you guys, so I wonder, आप लोग तो और ज़्यादा experienced होंगे. So, so you know, most of us here, me, Mahesh, or I would say many of us, जो एकदम भी नहीं समझते हैं और एकदम भी time नहीं दे पाते हैं या नहीं देते हैं, सो हम लोगों का एक है ना ट्रेडमार्क लाइन है कि अरे अभिषेक जी रुंगटा जी आप कर रहे हो तो हम लोग कर लेंगे, हम लोगों का पैसा भी लगा दो एंड ऑल दैट. सो डज दैट वर्क? आई मीन, because I don't see a very prompt or a very positive answer, even Mahesh or me saying, let's say Abhishek on a honest way, multiple times like this, कि अरे हमारा करोड़ 2 करोड़ 5 लाख 10 लाख जो आप लगाते हो हर वेंचर में हमारा भी लगा दो. So does that work really?
सर उसका एग्जांपल आपको देता हूँ जो आपको समझ में आएगा. आप पब्लिक मार्केट में इंडिविजुअल स्टॉक भी ले सकते हो या आप म्यूचुअल फंड में डाल सकते हो. म्यूचुअल फंड में आप अलग अलग ब्रांड में जाते हो, फिर आप कैटेगरी में जाते हो. तो अगर पहली बार कोई बोलता है म्यूचुअल फंड में डालो, क्या आप करोगे? इंडेक्स फंड में डालोगे. फिर जैसे आपको नॉलेज आएगा बोलेंगे अच्छा इंडेक्स में अब मेरे को निफ्टी 50 में डालना है, सॉरी निफ्टी बैंक में डालना है या स्मॉल कैप में डालना है. जितनी आपकी नॉलेज बढ़ती जाएगी एंड आफ्टर अ पॉइंट यू आर गुड एंड इसे अब मेरे को डायरेक्ट करना है. सो पीपल डू एंड सो द थिंग अबाउट स्टार्टअप इन्वेस्टिंग इज देयर इज नो राइट एंड रॉन्ग. As long as you follow some of the holy grails key, don't put all the money at once, don't put in just 2 companies and don't expect a return in 6 months. So it's a learning journey. And as Siddharth here said, don't get into this for FOMO. Do it if you really like vicariously learning, you want a financial outcome. And personally for me, I like the bragging rights. Like imagine you get into the next big company and you say, मैं इस company में पहला check डाला था. There is social credo. I mean, anywhere across the world you go. Because what happens is, फिर दूसरे startup जिसमें आपको डालना बोलो कि मैं उसका पहला investor था, वो तुरंत आपको opportunity देगा. So there's some social credo and value which is added back to it. So if you are not sure about it, start with the least friction. Nifty mutual fund. What is the equivalent of that in the startup world? There are funds, there are syndicates, there are people who you think are relevant for it. Because the way you also evaluate mutual fund is who's the fund manager or what is the brand, what are the past returns. Standard process वहाँ भी apply करो and use first principles thinking. Then once you get very comfortable with it, then go to your direct equity, which is your individual startups. That's how I would approach it.
Great. Yeah, Siddharth.
Have 5 girlfriends, it might work for him, it might not. Even one might not work for you.
It has never worked for me, bro. You know that.
So, see, again, I'm saying it works for Abhishek because Abhishek, Apoor, they have been into this digital and startup world for many, many years. You know, that's been their business. Not in terms of being their business, but because of that business, they've been in touch with these founders in one way or the other. You know, people might have worked with Abhishek, वो अभी खुद का startup कर लिया. So they've been into this world. So what will work for him might work for you. So he's in this system, you know, where all the smartest founders, you know, they might turn up to him for experience, might turn up to him for knowledge, might turn up to partner for him on his business. So his knowledge, his experience is very different. तो आपको ये अच्छा लगता है स्टार्टअप में जाना है तो like Apoor said, start giving time, start educating yourself. Otherwise, like he said, find ways to engage through a fund, and even if you don't do anything, you've not missed anything in life. The girlfriend is a different thing, but otherwise you've not missed.
But bro, तुम जैसे बोला FOMO भी मत करो. But at the same time, while you started your, you quoted Harsh Bhaiya saying that, you know, as a businessman, entrepreneur, you can just handle 1 or 2 stuff and the rest you have to act as an investor. So ये कहीं ना कहीं थोड़ा contradictory भी हो जा रहा है ना?
That's what I'm doing. Like earlier, I was trying to set up many businesses or partner with many businesses. Now I know I'm not running. So tomorrow I'm investing in, say, his business. I am not done anything. I just put in money like I have an investment bucket. You know, I've done it, but I'm not running that business. Earlier, I was trying to run businesses. Now I'm saying I will not run business. I'm managing one business. I'm happy with that.
All right.
Sorry to be a spoil sport, right? We have time to manage, right? So thank you.
One last question.
All the take it offline here on the floor, right? Okay, one last.
Yeah, go ahead.
Last question.
Thank you. As a young founder, what tips would you have for me to become that fundraising machine? Because honestly, we find it a little difficult to disconnect from everything that we are working on and actually pitch that business to investors, especially in seed rounds and early rounds as angel, looking for angel investors. Yeah, so how to become that fundraising machine?
I think extreme amount of clarity And clarity can be achieved by documenting a lot of what you do, right? Sharing, let's say, I have seen founders whose monthly reports come on the first of every month, right? That kind of, and what are some of the best VCs looking for is, and which is common among Vijay Shekhar, Ritesh, Bhavish, extreme obsessive behavior about one particular or many particular aspects of their business. Either it's the customer experience, right? So it has to be like a very strong internal drive, which translates into clarity in front of investor when you are communicating. I think clarity precedes everything to become a fundraising. It's the process of becoming a fundraising machine. It's not a one-day job.
I have a different view. My view is in every business, you don't need to be a fundraising machine. He invests in businesses which are fundraising machine. So if your business does not need that level of funding, it does not mean it's a bad startup or it's a different business. So the business will define if it will be a fundraising machine or you need. I have invested in startups, they've raised money only once in 5 years and they're doing pretty well. See, so each person is different, each person's approach is different. Each business is different. He might not invest in your business, that doesn't mean it's a bad business.
I mean, in short, if I have to tell you, आप अगर rocket बना रहे हो तो rocket fuel डालो, मारुति 800 में rocket fuel मत डालना, वो गलत हो जाएगी. And just to add 2 more points, clarity, resourcefulness, and shamelessness. ये 3 चीज चाहिए to be a fundraising machine. All right, thank you everyone, and thank you Apurva, Siddharth, and Siddharth.
Thank you so much, friends. It was really a very enticing session. Very practical, very grounded. Itna saaf suthra, transparent session I haven't really seen in recent times, right? They were all speaking from their heart. Bina kisi cheez ko hide and seek khele. The first benches are Yash. Do you really want to say that? But yes, thank you so much for your questions that made the session really interesting. Thank you so much. So now, the most interesting session for which we have been waiting. Now we'll have 2 startups come here up on the stage and they will pitch. And we will have the option to go and commit. Again, few things. Don't get into FOMO, as Siddharth mentioned. यार नहीं करेंगे तो नहीं करेंगे यार. और opportunities हैं. Sorry, my startup friends. I'm acting as an anti-sales guy, right? But it's important to be transparent and straightforward. And second, there is Apurva prescribed something, right? 2 pitches a week, right? 2 pitches a week. So for this week, I am supplying you the medicine. For next week onwards, you have to decide on the medicines yourself. So first is Sanchit. He is coming here to pitch his startup Preggers. He has set up a platform, end-to-end platform, whereby you will be able to get access to all the possible services and products with respect to women health, especially pregnancy. So I'll hand over the baton to Sanchit to take it forward from here. Sanchit, all the best.
Check. Thank you.
Thank you.
I have this. No, this is on. Do we want to wait? A lot of people have walked out. Shirish, do you want to wait for? Oh, it's okay? Okay. And how much time do we have? Okay, perfect. Thank you. Okay. No, so good evening and thank you for this opportunity. I'll start with our story. So I'm a offbeat startup founder, would want to share our story before I talk about the startup, the idea, what we're trying to do, and how we are different, right? So first I'll go with me. So we are 2 founders, couplepreneurs, what I call ourselves, right? Me and my wife. I'm Sanchit Agarwal. We're based out of Delhi NCR, Gurgaon specifically. 20 years in the corporate world. Got lucky, worked with some marquee brands. 2 biggest bankruptcies in the corporate world, anyone knows? Anderson and Lehman Brothers. I was there at that point of time. So I have 2 biggest bankruptcies in corporate world on my CV. Got lucky, worked with, so was an investment banker myself. First 10 years of my career, did M&A, corporate strategy. Last 10 years were professional services, running large businesses globally. Was in Deloitte Strategy Consulting, ran a $500 million P&L. Then joined Accenture, joined as to run a $1.2 billion P&L for Accenture globally. Grew it to $2 billion. in a very short span of time, got promoted and resigned the day I got promoted. Again, very, very rare to hear in the corporate world. And the reason was the heart was not there. So this is what I call Sanchit 2.0. I met an accident a few years back, and I was declared brought dead to the hospital and somehow survived. And that is when I survived and I grew up, I came back on my feet. I promised myself whenever it'll happen, but whenever I get a chance, I'll try to, do something more meaningful and impactful in life. And that happened after 15 years. So it took me 15 years to find the purpose. And the second thing is, this is a big, big shift for me personally, but it's through a journey I've gone through is from a hardcore finance, corporate guy going to health, and that to femtech, right? Women health, right? And so the inspiration or the passion behind that is my wife. She's on the left. So she's the other founder along with me. Her name is Aditi, and she's from she's kind of good part of her career she's done here in Calcutta. She was an ex-Sabyasachi head designer, so people in Calcutta would definitely know Sabyasachi. So kind of when I was dating her, I used to make very frequent trips to Calcutta to meet her in Topsia and Baliganj, so know Calcutta very, very well. So Aditi is a two-time cancer conqueror, I call her, not survivor, right? So first time she got cancer at the age of 25, just 6 months into our wedding, and Lehman Brothers had happened that time. So it was a very, very interesting, life for us. I could have lost my job, I did not, but 2008, we got married and she got cancer, 6 months, right? And I think somebody was talking about mental resilience in the room, right? So 10 years fast forward, it happened again with birth of her son. So very few women in the country who gave birth with cancer in her body. And then COVID hit. So again, could have been worse for us as a couple, right? And that is where, as a couple, we realized when we were going through our journey of, her health journey over the last 12 years, from a woman perspective on all the milestones we hit, one thing came very, very hard on us. We were living in a big city, Delhi, access to good doctors, money and everything. Still, one thing we realized, women health or her health was not prioritized, right? And that is where both of us said we have to do something about it. And that's where our passion about prioritizing or disrupting the way we look at women health in India kind of was born. And so both of us left our careers at the peak. Aditi is head designer of Sabyasachi, a big brand, largest Indian designer. I running a $2 billion P&L and a global MD of Accenture. Both of us left our careers at the peak late last year. And we set up Preggers. Who we are, right? So we are, so before I get into problem, so maybe let me talk about the problem first and then I'll get into the model. So there were a bunch of problems we saw, right? One is, as a woman, and I see a lot of men and no women, unfortunately, I think some of them left, but maybe women would relate more to this. Women health or women's journey of health is very, very complicated. We men have it easy. Trust me, guys. We have it very, very easy. And because women has a reproductive system, and that's the reason there are a lot of changes which happen, and a lot of these changes are all preventable and curable. And still, as a country, we know about it, we don't do much about it, right? So the entire journey is very, very broken. Second, women themselves, and I would have, as I said, loved to have few women in the room, but lack of self-care, right? Women themselves are attuned, and especially our culture in India, they are expected to, family care over self-care. And there's a lot of education and lack of awareness, right, which needs to be done. Third, there are brands and companies who, via product or a service, are trying to do something, but they are very, very niche. They're solving very niche problem, either through a product or a service, and the market is highly, highly fragmented, right? There is no scale player end-to-end looking at the entire journey, what we call as puberty to menopause, right? Right from a teenager, you become an adult, to 18, 20-year-old, to a 50-year-old, where your body goes through major transformations, right? And then the whole thing I spoke about is reactive care. And this as a country, we are very, very, now again, in general health, there are a few companies who have started getting into preventive care concept, but I recently, we onboarded one of the senior healthcare person in India as one of our advisors, and he said a very bold statement which stuck to me: unburden healthcare in India. It's a demand-supply thing, right? There is enough demand, limited supply. So how you can unburden healthcare in India is by preventive care. How you can get the right signals ahead of time, how can you be more preventive in nature. And then the last 2 points are very, very related to my personal experience. And when I was in Accenture, I was running a big P&L, 50,000 people in my team, 40% were women. And out of that, there was a 30 to 40% dropout of women not joining back the workforce because they become either new mothers or because of health-related issues. And the last is a very startling fact, right? 90% of working women face conflict to balance between, and let's accept it. In India as a society, women, irrespective of the strata, is expected to manage the family as well. It is a hard fact. And they face conflict between personal and balancing the professional life. And it's getting more and more accentuated in some of the larger cities, right? So this was a broad problem statement we saw. And we said, what can we do about it, right? So what we did is we have created India's largest, in a very short span of time, largest ecosystem focused on women health. And it is India's first platform, which is both products and services, right? And that's where we differentiate. So our main go-to-market product is journey-based care plans, what we call subscription plans. These are right from a woman, as I said, puberty, hits a kind of stage, she becomes an adult, to menopausal, so things like PCOS, things when it comes to maternity journey. We have introduced very, very new concepts for the first time in India around conception planning before you even get pregnant or you give birth. Plans around abortions, adoptions, miscarriages, spousal. This is a very, very big topic. Again, a taboo topic, not spoken much about. Sexual wellness is spousal abuse. After you become pregnant, the spouse doesn't want to, have a sexual relationship with you because of the body changes and all. Then menstrual endometriosis, which is one of the biggest issues, women-specific cancer care, and this is more personal to me, right, because of my wife's journey. So I think that's what we're looking at, right? So these are journey-based care plans. That's our go-to-market. What we have been able to do it along with that is products, which is the commerce side, women commerce. So the beauty about this is, and as I said, we're the only platform currently in India where when a customer is coming to you, you are actually giving them the end-to-end experience. And I give this example to everyone. So one of the largest products we have on our platform is a PCOS-T. It's a very, very standard product. 30% of Indian young women have PCOS now in some form or shape. And once somebody is buying a PCOS-T from us, we are very quickly able to sell a PCOS plan and vice versa. If they buy a plan from us, we are able to sell the product. So this is a very, very unique thing we have done. And this is where our retention, LTV, whatever the terms you want to use, has been significantly better than some of our competition. Second, what we have done is, as I said, we have created the entire wellness ecosystem. So what we look at are women wellness into 4 parts: mental wellness, spiritual wellness, social wellness, and physical wellness, right? And that's where we have products and services. I'll get into details later in interest of time. And then very, very focused on proactive disease management. I spoke about certain diseases, and that is where we have already created the largest infrastructure. So we went different, right? The typical model is people pick a niche problem, try to solve it, keep iterating. We have done the reverse. And the time will tell whether it works or not, but we have created the largest infrastructure already, and now what we are trying to do is, now to the same customer, we're selling multiple things. And as a result, the stickiness, the LTV, the retention is very, very high for us. And the last thing is, I'll talk about the organized ancillary services, and I think I was showing to Abhishek, we just booked a test in Siliguri, a very specialized test. It's a genetic test. And you guys won't believe it, that the customer who came to us, she bought a maternity gown from us, and we were able to sell a very specialized genetic test to us in Siliguri, sitting out of our platform in Delhi, right? And so our biggest customers for plans are, I'll show, but it's the top 8-9 cities because of the education awareness need. But our bigger customer is, I think, and I love what the tablet team presented, right? Bharat. Tier 3, Tier 4, Tier 5. There is propensity to pay, there is a demand, there is a need, there is no one going to them, especially on the wellness and healthcare side, holistic side, right? We had done a kind of a sperm test, infertility test in Chhapra in Bihar. We have customers in Daman Diu, Lakshadweep, and I was telling Andamans has become a big base for us, Jammu and Kashmir, right? My geography has improved actually in the last few months of our existence because I didn't even know these places exist in India, right? So that's the broader ecosystem, and then product services and innovation, this is our biggest focus, how we can disrupt and get preventive care. So for example, world's first smart yoga mat, it's a revolutionary product. Actually, Apple is launching in December in India. We have launched before Apple. India's first wearable fetal movement tracker, self-sampling testing kits. You name a lot of innovation we have done through a partner network. This is not we have done ourselves, it's through a partner network. So that's the solution or the offering we take to the market. The opportunity, I know we spoke about that billion numbers and then we have to discount by 70%. Even if you discount by 70%, we're looking at a very, very large market. The reason because this market is highly, highly fragmented and unorganized, right? That's the whole part of it. So we're looking at a $1 to $1.5 billion opportunity year on year in which we can obviously look at a sizable portion from a kind of a consolidation perspective, right? So I won't go into details, interest of time, I would rather have more Q&A. Then what is our go-to-market strategy? So this is again where we are very, very unique, right? So there you see we are D2C, B2D. So it's very confusing, but I'll explain it, right? So we are direct to customer through our apps and portals. B to D2C is business to doctor to customer. Very, very quickly we realized in healthcare you cannot take doctor out of the equation. You cannot go completely digital. You have to be phygital. A lot of our competition is purely digital, and we learned very quickly that that's the reason you're not scaling very well. And then B2B2C, I'll come to that. So right in this, what we do is we typically reach out to our customers through our the classic ways of digital marketing. Then we go on to doctor and clinic referrals. So we go offline where we are partnering with OBGYNs and hospitals and clinics, and the core of a OBGYN, a doctor or a hospital is medical or clinical care. Anything which is surrounding overall wellness is what we are providing now. And we work on a very, very straightforward referral model, right? And similarly, I gave examples for hospital. We just onboarded Motherhood, is one of the largest chains, CK Birla Hospital, Apollo. And for these hospitals, the entire clinical part of the story is all sorted, but anything beyond that, they're losing the customer or what we call as LTV on the table, right? And that's where we come in and we're becoming the fulfillment partners. Then we have partnerships and B2B upsells and all that, right? So that's your, what I call as B2D2C, business to doctor to customer. So doctors are referring us rather than, while we are reaching out ourselves, but the doctors are referring us. The second thing is B2BC. This is very interesting. We didn't, you might think we are doing too much, but as I said earlier, we have created the infrastructure. So it's just about go to market and execution. We have done, I'm very proud, in just span of 4 months, we have done very, very large deals. Marsh McLennan, those you guys know, is world's largest insurance broker. They underwrote $3 billion worth of insurance last year in India. The biggest corporates you name, Marsh writes insurance for them. We have partnered, we have a strategic partnership. Marsh is taking us to all the corporates, they underwrite insurance, and we have innovated there is India's first women at work care programs. These are very, very exhaustive programs, much beyond your regular teleconsultations and health checkups for corporate employees. And the target is any of the corporates who are very, very focused on women-centric welfare, right? And I spoke about the problem statement in the beginning of the presentation, and their spouses, right? So Marsh McLennan, we've been able to, get into some large corporates to them. So they are selling on our behalf, right? And we are kind of doing the fulfilling. OnSecurity, for those you know, is one of the fastest growing insurtech in India. We have already signed a large deal with them, 5,000 users, subscribers. It's going live on 16th of August. You'll see a lot of splash in the market and videos and all coming through. And TrueWorth Wellness, this is a very interesting one. TrueWorth, if you'll see our competitive landscape slide, our competition, now they are our partner. So TrueWorth is one of India's oldest corporate wellness company, 18 years in existence. They themselves reached out that, guys, the product you have built, we have not built in 18 years. We want to partner. We will take it to the clients. We'll co-brand it, right? So that has completely changed the game for us. So I think somebody was talking about cash flow. So that's our cash flow business. And this is where we are burning some, not a lot, to acquire customers, right? And we are the only platform currently in India where single interface is for both B2B and retail clients. So when you log into our apps or platform, if you log in as a retail customer, you see whatever you see. And when you log in with your corporate email ID like abc.pwc@com, you'll see a corporate tab which opens up and you see the entire benefits of your program, which is part of your standard corporate plan. But then because you are on the retail platform itself, our ability to upsell, cross-sell increases significantly. Right? Because there are certain things which are standard in your program. Rest everything is kind of an upsell for us, right? So that's how we are different and unique, right? So both D2C and B2B getting addressed in single platform. Traction so far, I've kept it very short, so because of the Q&A, this is what I call 3 months of build, 4 months of run. We started the company, literally started in December of last year. We went live in March. We moved very, very fast. Proud to say that in 3 months, the largest infrastructure in India, 200 plus partners, 15,000 plus products and services, 150 cities where we can deliver medical services today in India. And we have already got 900 plus paid retail customers amounting to 30 lakhs of retail sales. This is not B2B involved. B2B is kicking off from next month in August, as in 2 weeks from now, and that's a big cash flow for us. And I spoke about this is what I'm very proud of. I know 4 months is a very, very small time, 90% renewal rate. Every individual or woman who has subscribed to a plan has renewed with us. Only exceptional cases, either they did not need the service anymore, otherwise complete, literally 100% renewal, right? So that's where we are, and I think we spoke about the CAC versus customer value. So our average number of customers, and you see the blended customer value, right? So overall, we are at a 3x. So again, for a new brand, 4 months, couldn't have been more happier, right? In terms of the traction we've got. Roadmap, and then I'll pause. Might look a busy slide, but this is where we are currently. We have care plans for these programs. We have maternity, women health and wellness products, and we have women at work care programs. Our target is women 18 to 50 and couples 24 to 40 years of age. We are targeting top 8 cities for care plans, pan-India for products, especially tier 3 onwards, because those are the customers where we are selling a product and then converting into a service. We have customers from Kanpur and Gwalior and Tarantara and Asansol who are coming for second opinions because they wanted to talk to a doctor in a bigger city because of some of the ailments they were not able to address, right? And then very interesting is NRIs for digital services. We have not started, but we have 10% of our customers who are NRIs, and especially in Europe and Southeast Asia, which is a familiar time zone to India. Because of the very reason they are Indians, so their body kind of diet, nutrition, whatnot, yoga, whatever they want to buy from us, they want to trust an Indian brand rather than buy something locally. So most of the services are currently digital, right? So it's very easy to tap into that market. So we are not actively going. This is just word of mouth and referrals. Then the second kind of phase, we will get into very, very specific care plans for menstrual, sexual wellness, women-specific cancer. Again, a big innovation we are doing there. We are bringing to India world's first blood test to detect cancer. It's called the Phantom test. For those interested, can Google it. It's a revolutionary test, already available in Europe and UK. India, we as a country are undergoing trials. So the idea is every time a woman becomes a mother, 20% of women, and this is an established fact, within a span of 5 years, develop some sort of women-specific cancer, breast, cervical, or ovarian. This is a known fact. Nobody's doing anything about it. And this is where we want to capture our customers who join us in the first phase of their health and wellness journey, get into very, very specific disease management through preventive care, right? And then obviously offline physical delivery of select services. Currently, as I said, most of the delivery services are digital in nature. We want to very quickly move on to the physical part of it because, as I said, as a healthcare cannot be a digital business. Eventually, this is at least our understanding. It cannot be a deep discounting business, our understanding, and it has to be a referral model. You cannot take doctor out of the equation. So we want to be very focused on physical delivery. And then third is obviously we'll get into some level of telehealth and point of care for Bharat, what we call, right? And the last thing is in terms of how we are moving, we are looking at already early on, as I mentioned earlier, there is a massive, massive fragmentation. There are a few brands here and there. Either they are very regional. Nobody currently in India is solving this at a pan-India level, number one. Nobody is solving the entire journey. We want to be the player. We want to be the kind of the consolidation player in the market. So we already identified certain certain players where we want to, kind of acquire them and consolidate the market further, right? So that's kind of the very, very quick 10-minute overview, and I'll pause for questions. Anyone who has? Please.
So let me start by saying it's so incredible to hear about the product and the journey you've had so far. So
thank you.
Fellow Deloitte strategy ex-guy, by the way.
Oh, so I was SNO?
Yep.
Yeah.
Same. So you said you guys had a 0.05% right now conversion of people coming to the websites versus people converting because there's such a big barrier of education and whatnot.
Yes.
So what's the plan there? How are you, upping that number in the short term and long term?
So as I mentioned, so one, we are 4 months old. So one thing I want to level set, we started operations only in March, right? So it's a very, very new brand. Trust, you have to build that trust. So we are building trust through education and awareness and building communities. So we have a lot of women-specific small groups and communities. So that's number one. So with trust, you'll get there. Number two is I mentioned about the B2D2C, what I call business to doctor to customer. So doctors will be our kind of people who will help us kind of build that trust and bridge the gap and improve the conversion. In fact, currently our offline is 5 to 10%. I'll be very transparent, 4 months, right? Not being defensive, but that's the reality. That we want to take to 40%. And that's where you'll see the conversion happening much more efficiently and effectively, right?
Because it'll just become word of mouth.
Yeah. And that's what we have already started seeing. So our first NRI customer, I'll just give you an example. First NRI customer came from, we had a Bangalore customer, her sister-in-law was in UK. She started this amazing platform. I went through their program. You should buy it. And that person now has referred to 5 more people. And so when we started in March, our customer acquisition cost was 2,700 Indian rupees. Now we are at 650 already in a short span of 4 months. And we want to go to 200 now. And somebody spoke about the Dhanda in the business. I am a finance guy, hardcore. I only understand cost and revenue. There's no other language I understand. And I'm Agrawal, by the way, in my name, so I understand only how to do, run the businesses. So we are very, very focused. We won't get into deep discounting. We won't get into, we are very focused on reducing the CAC and go word of mouth and referral through offline channels. That's a strategy.
Makes me ask that, I mean, you and your wife both from non-medical background,
Yes.
apart from the unfortunate medical.
Oh, my presentation is gone. Can we?
क्योंकि generally medical line में हम लोगों को यही बोला जाता है ना कि अरे कोई भी चीज medical line का सोचना है तो कोई डॉक्टर साथ में होना चाहिए.
है ना sir. I have a slide I did not show in interest of time. I'll show you the slide. Can I get the presentation back, please? So we've been fortunate. We got some senior folks in the industry to back us, both in terms of money and time. So we have Dr. Sanjay Arora. He is the group medical director of Dr. Lal Path Lab, 30 years. There's a Suburban Diagnostic Companies. If you Google him, he's a very, very renowned name in healthcare. He's onboarded as a potential investor as well as advisor. We have what we call as key opinion leaders. So I know it's not coming up, but I can show. So we have Max Nanavati, for those you know in Mumbai, HOD of Max Nanavati, Dr. Suruchi Desai as our advisor and investor. We have Dr. Suman Lal, again Max Healthcare. We have a bunch of senior, I had limited space, so I did not put all the names. So we have a panel of 12 doctors in every part of the country, west, east, north and south. In Calcutta, we have Apollo, I'm sorry, I'm missing, there's Apollo Doctor, Glendale, sorry, my bad. So the HOD of that, Dr. Hema, she's joining us next month. We are just negotiating the contract with her. So what we have done is we have got a lot of big industry guys in the healthcare space to guide us and be with us as part of the journey.
Did I get that right? That you mentioned 20% of women develop some sort of cancer in 5 years after pregnancy?
Yes, because of the hormonal imbalance.
What is the source of this data?
So this is, you can Google it. There are a lot of, John Hopkins has published this study. The bunch of medical colleges have published, and there is a logic to it, right? And I mentioned about the reproductive system. There is a hormonal imbalance which happens in a woman.
So this is for US or this is worldwide?
No, global. I'm talking about global.
Okay.
Global.
Okay.
And I have lived it. So when my son was born, my wife had cancer because of the hormonal imbalances which happened because of pregnancy. So my wife was going through chemo when my son was 2 months old. And this is a known fact. I can send you the reference points after this meeting.
Yeah, and your target audience or target market is 18 to 50 years. Usually people do segmentation and have multiple brands for such a large target market.
No, you're right. And that's where I think I mentioned, right? We did approach differently, right? We have come that we are looking at your entire journey. Wherever you start your journey, we'll start looking at your journey. If you are an 18-year-old, we give you the right preventive care through your journey. And if you're a 30-year-old, because then then your maternity part of the story starts. If you are 50-year-old, then your menstruation part of the story starts, right? So that's where we are kind of segmenting there depending on the age where you are.
But your brand Preggers
we're
is
changing
more
the brand.
symbolic of
No, so changing the brand.
maternity.
So 15 days you'll see a new brand. We have just applied for a few trademarks. So you are absolutely right. We started 4 months back, and I think there was a point around you pivot, repivot on the model and learn. So we learned very, very quickly in a span of 2 months that while we started as a maternity care focused company, in a 4 months time, given we had created the infrastructure, we realized we can serve a larger audience, a larger TG to your point. And so we're changing the brand. 15 days, you'll see a new name. And we are already, actually, I spoke to Abhishek that I need his help to, do that pivot to the new brand. Yes, we are doing that. Thank you, Sanjit. Thank you. Thank you, everyone.
Thank you so much, friends.
Yeah, so we are raising $500,000, 4 crores by dollar rate, $80 rate. Now we got that keep fluctuating at a 20 CR pre-money valuation. And yeah, so we have few kind of industry veterans already committing us. So we have already got 250K plus commitment. And I think we just opened the round last week, and we're just trying to close it and wrap it.
So Seeders is investing in them. So in case if anybody is really interested in becoming a part, feel free to message Alkesh, Abhishek, or myself. We'll be happy to add you to the overall investments. Thank you.
Thank you, everyone. Thank you.
And I think Sanchit is here itself. So if you have any further questions, feel free to talk to him. And now after Sanchit, I have got Shiv. Shiv, are you here? Right. So Shiv runs a company called Kaching, right? Now this is a very interesting company, especially so for all the angel investors. You know why? What does Kaching mean? The sound of money, right? So I'm sure all the angel investors are going to enjoy the journey of Kaching. Over to you, Shiv.
I'll take the mic. One sec. Do my phone there? Can everybody hear me normally? Mic's good. Check. Cool. This is good. Hey everyone, this is going to be 5 minutes, and then you can ask me questions if you'd like. But I actually saved you the time for having asked questions, and you'll check it when I send you the entirety of the deck out. My name is Shiv. I run Kaching. Kaching, we're calling it the future of word of mouth. It's something that's probably the most repeated phrase in the entirety of the 2.5 hours that we've been here. You've heard word of mouth, you've heard referrals, you've heard recommendations over and over again. So across literally every single thing that we do in life, be it investments, be it getting to meet new people, be it which restaurants to go to, which shirts to buy, word of mouth is what underpins our universe, and yet there is nobody that's built anything for it. So we're targeting a very specific segment. We're targeting retail, and we're targeting F&B, and we're building the future of referral programs and word of mouth for it. As you can imagine, word of mouth is very unquantifiable for most brands, for most stores, for most physical establishments. So the way we're going about it is essentially trying to figure out how, in the easiest way possible, stores like restaurants, bars, and retailers can make sense of their word of mouth, figure out who's driving business to them, and reward them for it. Because the thesis is dead simple. At the end of the day, if Alkesh has referred Shiv to a store, and Shiv goes to the store and makes a purchase because of it, today the store has no idea where their word of mouth is coming from, and the store has no idea who to thank for this sale coming through. Some more, a better way to think about this is companies like Tesla, companies like Uber, Airbnb, or closer to home, Google Pay, have some of the most robust referral programs that you would have ever seen. In fact, you wouldn't even realize it, but the vast majority of B2C companies and D2C brands today run entirely because of the powerful word of mouth and referral programs that they do. So e-commerce companies know full well, e-commerce companies and apps know full well the importance and ubiquity of word of mouth and referrals, which is why they continually incentivize their users and customers customers to recommend that product to more of their friends, families, co-workers, colleagues, etc. It's how Airbnb is a billion-dollar company today. It's how a new Tesla rolls out of each of their stores practically every other second, so on and so forth. We think that power should not just rest with e-commerce companies and apps. We think physical is 8 times as large as an opportunity. So practically any store you see in a mall, to your favorite restaurants, to your favorite car dealerships, should have a referral program. Oddly enough and beautifully enough, there's nobody that's ever built on it just yet, and we think we're onto something really big. So the companies you see on the bottom, Rakuten, WPP, Publicis Group, Apollo Global Management, etc., are some of the world's biggest e-commerce giants. They're some of the world's biggest PE companies, and they've been in the referral space for a very long time. The referral space and the word of mouth space is actually 30 years old. It's as old as e-commerce itself. Because when e-commerce launched, they knew full well that a way for them to grow and a way for them to propagate would be incentivizing their users to spread the word. So if you're familiar with Amazon Affiliate as a referral program, how that works is Shiv gets a unique link for a Bose headphone. If Shiv shares that unique link with a friend and a friend makes a purchase using that unique link, then Shiv gets an attribution reward for it, and my friend will get a complimentary discount or a complimentary code off thanks to my purchase. So I get attributed for it, and my friend gets something as a result. It's the same thing for Tesla, it's the same thing for Airbnb, Uber, Dropbox, and so on. These are the companies that power that. Rakuten, Share a Sale, Awin, so on and so forth. They process today over $350 billion in GMV by partner programs and referral programs. So every time Shiv refers a sale to someone, that's counted as GMV to them, and this is the industry that powers that. Our model is dead simple. There's no app, there's no sign up, and there's zero friction for end users. A merchant simply decides on a two-sided referral reward. One for the referred customer who's in a store, and one for the referrer who has made that referral. They put this up in-store as in-store marketing assets, which we custom print and design for them. So essentially, if you go to a H&M 6 months from now, Kaching would be powering their referral program, and this poster is something that you would see on the wall. It says, hey, referred customer, because that's the perspective you should view this in. Show our staff the Instagram profile or Twitter profile or WhatsApp number of who referred you here and get a surprise gift. The person who referred you gets a surprise reward as well. And as long as the store gets to do this and put this in store, they will be able to track their referrals just like this. So the everyday person posts on Instagram or Snapchat or Twitter or WhatsApp about the purchase like they normally do. There's no sign up, there is no app, there is no additional effort that they have to take. They simply spread the word about the places they visit and the stuff they bought. Their friends get influenced and they walk into the store like they normally would. So if Alkesh posts an Instagram story somewhere, I'm like, wow, that food tastes really good. That looks really good, and I would end up walking into the store with my friends. At checkout, or when the bill arrives, I simply show the Instagram profile or Twitter profile or WhatsApp number of Alkesh to the staff. It's Shiv's way of letting the store and the system know that Shiv has been referred by @alkesh.23, if that's his Instagram profile. So his Instagram profile or username or handle or WhatsApp number becomes a way for the store to attribute Shiv's visit to Alkesh. That's it, no additional effort. So the referred customer simply shows the profile of who referred him to the staff, and what the staff is having is Kaching's referral scanner app. It's an app that stays on their phone, and it's no additional hardware at checkout. What that is looking for is the @handle that is shown by the referred customer. So if Shiv is the referred customer, he's showing the profile of Alkesh that gets scanned by the scanner app to attribute my visit to Alkesh. It's as simple as that. The referrer gets an automatic payout that goes straight to their bank, and the referred customer enjoys a complimentary gift or an accessory or a complimentary dish wherever they are. As a business owner, you have access to all of this information on one single dashboard. So you're able to see total referral-driven sales, total number of referrers, and ultimately your bottom line, which is the total billing generated through referrals. It gets even better. So when you break that down on a per invoice basis, you're able to see who has referred that business through what platform, and if they tap on view, they're able to see the corresponding image that was scanned at a store and the corresponding bill for it. So there's no discrepancy between what the accounts team will see at the POS at the end of the month versus what's reflected on the Kaching dashboard. It gets even better. So the average store is now able to identify who their superstars are. So they're able to see that Alkesh has driven business worth 34,000 that week. They're able to see Shiv has referred business worth 48,000 that week, so on and so forth. So these people across their platforms stores would be able to see who their key opinion leaders, their super active superstars, their main business drivers are, and they can then invite these people back for further feedback sessions, new menu drops, so on and so forth. So we've signed up over 400 stores. We've been live since September of last year. The average store makes anywhere from, I'll get to that in a bit. This is our stores. We're live in 145 stores today, another 250, 275 that's yet to go live. And this is the referrer growth. The referrer growth is essentially if one Alkesh refers one shift to a store, that's counted as one referrer. Alkesh is the referrer. So that's our growth, and this comes entirely from the stores, meaning which Kaching does not have to do anything additional to acquire these referrers to become a part of our network. The average store makes anywhere from 50 to 60K in additional revenue driven through referrals each week. Some of our best performing stores do almost 3.5 lakh rupees in additional revenue driven through referrals. The average order value at some of our stores is about 2,400. This is not really the best way to indicate what the average order value will be across all stores, because each store essentially would fall under a specific cohort. Retail AOV tends to be higher. Individual F&B stores tend to have a lower AOV, so on and so forth. But ultimately, this is what the money is spent at an average store by an average referred customer. Influencer payouts today cross over 4 lakh rupees, and as of today, we're processing almost over 10,000 rupees in payouts to influencers. So if 10,000 rupees per day in payouts to influencers. So if I'm an influencer and I have participated with Kaching and I've referred a friend to a store, cumulatively, that number is over 10,000 rupees per day as of today. This is our model. We don't charge a commission from stores, and stores love that approach. We simply bill a flat fee each month to stores. This is 7,500 rupees per month per store. It ranges anywhere from 3,750 to 7,500 per month per store. The bigger chains knock us down. Individual stores are willing to pay this price, and it comes with a 6x ROI guarantee, which means the average store will make 45,000 rupees from the referral program, else they get their money back, no questions asked. In fact, we've only had about 6 stores ever have that clause inflicted, and that was practically our fault. It's a mix of us not doing onboarding right, it's a mix of that store not being a fit, etc. But the vast majority of stores do really well. So this is the kind of content that you as a business owner will get to see an explosion of happening, because now that the referral program is in place and the incentives in place now exist, you'll see an explosion in organic posts about you on social media. When that buzz cycle keeps going on, new customers get to discover your place for the first time, because your existing customers would now be incentivized to spread the word. So the more referrals we're able to track, the more referrals happen, and thus the cycle continues, and essentially the business never runs out of business. The beautiful part about our business, I think, is that we're platform, geography, and industry agnostic. Word of mouth is the same, whether it's in Kolkata, whether it's in Chennai, whether it's in Madrid, San Francisco, or Tokyo. The fact that we're platform agnostic means irrespective of what Google, of the Google Play Store or the App Store or individual governments come up with respect to apps and their policies, our business is unfettered, because you could take Kaching out of the equation altogether. You could have started this company 1,000 years ago or 1,000 years from now, and it will still make perfect sense to individual stores, which is what I particularly love about this. What this also means is tomorrow when people rip our model off and we have 5 competitors in 2023 and beyond, it doesn't matter, because the space is so large. In fact, the immediately addressable, and not the total addressable market, is 500,000 stores, which is something that we would be lucky to hit 5-7 years from now. 500,000 stores where we're guaranteed to power their referral program at, because this is going to become as ubiquitous as POS and CRM, right? Companies like Salesforce, Zendesk, and Freshdesk today have essentially made a name for themselves, because they carved a category out and they said, every small, medium, and large business is now going to have my software. We think we're onto something massive here, because word-of-mouth software and referral tracking software is not something that traditional players today can offer. It's a full-fledged company, it takes full-fledged dedication, and it's something that essentially replaces the entire marketing ops of most physical stores. So we're at essentially the starting point of something like that. Where it gets really interesting is what we're calling the Kaching network. So the B2B business is a no-brainer. Irrespective of how well our execution capabilities play out, we will stumble into 50,000 stores over the next 2-3 years and beyond. Because practically every tier 1 and tier 2 store, or a better way to think of it is any store you see in a mall today, is going to have Kaching's referral program over the next 2-3 years and beyond. But as a virtue of running the referral program in physical stores, we get to identify every Alkesh, every Shiv, every Srish, Pallav, and so on, who are currently referring their friends to physical stores. And that data set is uniquely important, because what we're able to capture is their Instagram handle, their WhatsApp number, their UPI handle, and how much influence they have, what we're calling a cloud score. So what we're able to do with this is by virtue of running the physical referral programs, we get to identify who's driving how much business to stores and therefore what their social rank is. We then utilize this user base of key opinion leaders and Kaching network people, and we reach out to them for further campaigns for apps, brands, D2C companies, and beyond. We've done over half a dozen so far, where we've partnered with companies like Snapchat to launch their app Zenly in India. What we did was essentially reach out to our micro-influencer community of everyday people like you and me, and it includes larger influencers who do this for a living. And we simply said, spread the word about this app, and we will reward you for it. So for Zenly, that was a $40,000 deal at peak pandemic, and we launched their Zenly product in India. So Snap paid us that. We grew Chennai to becoming Zenly's #1 India city, and their fastest growing Asia city, and their quickest city to reach 50,000 MAUs. We did the same thing with Jar. Jar today is a very famous company. The founders of Jar are also investors in Kaching, but we launched Jar in Chennai when they didn't even have an iOS app, and they were only one round of funding in. So we'd like to think a large proportion of their 8 million, 10 million users today came from the fact that we seeded that seed in one of India's largest metropolitan cities. Again, what we did with Jar was we simply got our network to spread the word about Jar to their friends, family, coworkers, and so on. And that is a chain reaction that continues to set off today. We've done the same thing in the past with Dunzo. We grew a company called Enhance. We're growing a D2C brand called Plush. And what we're launching in the backend is a neobank for kids called Pencilton. There's a cancer testing for women company called Karkinos, which today is actually they raised India's biggest seed round, if I'm not wrong. They're doing an at-home cancer test, like how companies do an at-home COVID test. And they think the next 1 billion, out of the next 1 billion tests that they're going to do, 500 million of those tests are going to come because somebody referred somebody to take a test. Again, we're launching a bunch of other brands, D2C coffee brands, a few other apps, etc. Where it gets really interesting is on the bottom, what we're brewing, what we're calling Kaching Labs. Eventually, by us becoming a distribution-first company, by us owning our proprietary distribution, right? Today, we have over 12,000 people on the network that are currently spreading the word about all this stuff. When we get to, say, 10,000 stores, and the network becomes 500,000 people, that becomes our proprietary distribution. At the push of a button, we can have 500,000 people spreading any agenda, posting any Instagram story, absolutely anything that we want. And we think owning that distribution is going to be crucial because eventually where we're headed is we're going to become a venture studio. We're going to have our B2B business bankroll our B2C ambitions. So we won't be launching the next Jar. We will be building the next Jar. We'll be building the next Enhance and the next Zenly because we're not going to just be launching the world's biggest companies in India. We're using our distribution to take India's best companies to the world. That's the long and short of it. It's the future of word of mouth. It's a business that we think is going to be undomitable over the next 100 years and beyond, fundamentally because it's a concept that's existed for over 1,000 years, and it's going to exist for over the next 1,000 years, whether Kaching exists or not. And we're very excited to come build on this theme, which, heck, isn't even a fad. It's how the world and the universe runs. If you'd like, I actually don't do these presentations very often. You can scan our code, and it takes you to a one-pager, and then our very in-depth Notion deck. Because I remember on the panel, everybody was talking about how entrepreneurs need to be thorough, they need to know their ins and outs of the business, they need to be super practical, et cetera, et cetera. I think you will really like and enjoy going through the entirety of our deck. I'm going to show you a snapshot. This is our Notion deck, and it doesn't read like a typical deck. It's actually an investment memo. So you'll be able to see what our metrics are, what our thinking is. I know we'll open to FAQs, but irrespective of how much time we have, practically everything you can ask us, what's the GTM, what's the strategy, et cetera, we have it answered already with a lot of insights and a lot of data points. One last thing is, I think this is something you will see if you are going to become a very frequent angel investor. You will not actually see this too often. This is our bi-monthly investor updates that we send out to all of our investor base. Give me one sec. Yeah, so you'll see a detailed breakdown of how well we've done, how well we've not done, everything that's going good, everything that's going bad, et cetera, and it's all laid out. That's it. This is the long and short of it. We are raising $1 million this round. We're very lucky to have some of India's best angels and investors already on board. These are the founders of Swiggy, Harsha and Nandan, founders of Razorpay, founder of India Mart, Mr. Dinesh Agarwal, so on and so forth. We're very lucky to obviously have seeders leading our current round. We have about 3.5 crores left in the round. So if you'd like to participate, you know who to hit up. And you've had access to the deck prior as well. Very, very happy to chat. Thanks, guys. Oh, sure. There's 90 more seconds, and then we can have chat. Give me a sec. Oh, audio. You already know the power of word of mouth. It's the magical heartbeat of your business. But still, you continue to spend time, money, and effort trying to advertise outside your store when your actual advertisers are sitting right inside. Welcome to Kaching. It's the best way to reward your customers for referring their friends to your store. Here's how it works. Just decide on a deal that your customers can share with their friends and decide the referral reward amount for when a successful referral happens. Customers go on to snap pictures of their food and post it on social media with a caption that includes the deal. Their friends view that content while scrolling through and decide to visit your restaurant. Once inside, they simply show the social media profile of the referrer to the cashier, who scans it with the Kaching referral scanner app that we provide. And voila! Customer gets the deal and the referral reward is automatically processed. And the customers who just came in will now start referring their friends as well. Of course, you can track all the sales driven via referrals on the Kaching dashboard, get total number of referrals and all the referred bills individually. Kaching identifies your top referrers, shows you the combined payout each month, and even gets you more inspiration and ideas to maximize sales. Best part? All these features come backed by a 6x ROI guarantee. Unlock the magic of word of mouth today. Visit kaching.co.in. That's it. We did the same thing for retail, but that was all. Do you have any doubts? Okay.
Questions? If none, Shiv is here, so you can discuss with him on the floor. And just like, thank you so much, Shiv. It was really power-packed pitch. Thank you so much. It was very positive energy for all of us. So just like all good things come to an end, even this event does. So may I invite Mahesh Bhai on the dais for the vote of thanks.
Thank you, Srish. Friends, can we have a big round of applause for all the speakers, for all the pitching? In fact, it was one of our first experience for ICBI. A big round of applause for Alkesh, because this was totally curated, organized, executed. Totally your baby, Alkesh. I'm sure we'll have at least one such events every quarter where we can be more, we might not have 2 tablets, as Srish was saying, every week, but at least we can provide 2 tablets every quarter in ICBI, if not more. So thank you so much, friends, for your time. I'd just like to update that we have a great event coming up on the 5th of August by one of our very own ICBN, Abhishek Rungta. We have tied up with them. It's a beautiful summit. Please log into that. And we have been partnering as the business chambers in the past 3 years. And the line of speakers have been excellent. So request everybody to please register and make the most of the event. We have an action-packed August, honestly. So after the 5th, we have again tied up with JW Marriott, and we will be celebrating 75 years of independence with a very renowned Kavi, Kumar Vishwas, followed with a cocktail dinner at JW Marriott on the 15th of August. Details will follow soon. We even have an investor summit on the 27th of August, again curated by our very own ICBN Vivek Bajaj. So request you to block your dates. And as I said, we are a little late because it's Saturday, I'm sure. But we have the high tea ready. And thank you once again, everybody, for being part of this beautiful session. And I'll request everybody for the group picture, and then we can head for the high tea. Thank you so much. Thank you.